Very good morning to you all. Very good morning, online students. I hope I am audible and also the screen is visible. Online students, I hope I am audible and also the screen is visible. Yes, sir. Yes, sir. Yes, sir. So, in our previous class, we had discussed something on income from house property. What did we study, sir? Section 22 says, starting section, rental income or annual value of a house property will be taxable under the head income from house property if what, sir? Is even smaller. Rental income from a house property will be taxable under the head income from house property if two conditions are satisfied. Condition number 1, there should be a house property and assessor should be owner of such house property. House property means what, sir? Building and land appertaining to such house building. There are two types of house property for taxation purpose. One is called as let out property, another is called as self-occupied property. Let out property means what, sir? Let out property means that house property which is given on rent, and self-occupied property means the property which you are using for your own purpose. Now, if it is a let out property, lawmaker says if it is a let out property, then it will always be taxable, and the income from let out property will be taxable, and they had income from house property. And if it is a self-occupied property, I will check whether it is self-occupied for business purpose or for residence purpose. If it is self-occupied for business purpose, ignore it. If it is self-occupied for residence purpose, then I'll see how many properties you have. Up to 2 properties are exempt, and more than 2 properties will be deemed as let out property. How do I compute the income from house property? Municipal value fair rate, whichever is higher, compare that with standard rent, whichever is lower, that is your expected rent. Compare expected rent with actual rent, whichever is higher, that will give you your gross annual value. From that subtract municipal taxes, you will get your net annual value. From that subtract deductions under section 24A, 24B, you will get income from house property. Now, deductions are of what is actual rate, sir? Actual rate is rent received plus rent receivable minus unrealized rent. Rent received plus rent receivable minus unrealized rent. Unrealized rent should be subtracted if 4 conditions are satisfied. Tenancy should be bona fide. Tenant should have vacated the property. And tenant should have not occupied any other property of the same assessee, and reasonable steps should have been taken for recovering this unrealized rent. Then deduction under section 24A, standard deduction flat 30% of NAV you will get, and 24B, interest on loan. Interest on loan will be allowed as deduction if the loan is taken for construction, purchase, repairs, renovation of house property. And if you take the loan, fresh loan for repaying existing house property loan, then also interest will be allowed as deduction. Interest on interest is not allowed as deduction. How much interest is allowed for let out property? Deemed to be let out property, there is no limit, but for self-occupied property, normally it is 30,000, but you will get up to 2 lakh rupees in some special cases if the loan is taken on or after 1/4/1999. Loan is taken for construction of house property or purchase of house property, and if it is taken for construction, construction should be completed within 5 years. Now, if you are a person who is opting for default tax regime, you cannot claim interest deduction for let out self-occupied property. And we studied pre-construction period interest. After studying pre-construction period interest, we studied what's the concept of vacancy. In case of vacancy, what do? If the expected rent is more than actual place vacancy rent, then expected rent will be taken as gross annual value. If expected rent is less than or equal to actual place vacancy rent, then actual rent will be taken as gross annual value. Then we saw in case of partly area wise or time wise. If it is partly area wise, then divide everything based on what is let out, what is self-occupied, and compute the income from house property. You will for separately for self-occupied property and let out property. And if it is partly let out, partly self-occupied time wise, then compute the income from house property as if the property was let out for full year. However, actual rent should be taken only for let out portion, and interest will be allowed fully. In case of ownership, compute the income from house property as if there is no ownership, and whatever final answer you get, divide between each owner in the ratio of their ownership. And section 25A, taxability of arrears of rent or unrealized rent. So if you receive it in future, it will be taxable in future. How much is taxable, sir? Amount received into 70% is taxable. Anyone has any question in whatever we have discussed till now? Okay. The next topic for discussion is what, sir? Under house property only, we have one more concept, small concept called as what if I have more than, yes Sundari, homework question. We'll look. What did you get?
Sir, one answer.
Income from house property. Yes, sir.
5,86,500 total divided by 2,93,250.
Wrong answer.
I got another answer. 1,69,500. After divided each 1,69,500.
We'll see, sir. Income from house property, if there are more than one, if there are more than two self-occupied property. Do you know there is something called a self-occupied property? Only up to two self-occupied property you can claim exemption. If you have more than two, that will be deemed as let out property. Correct? No. Now my question to you, Anis, Anis, you have 5 girlfriends. You have 5 dots in your life. Now, when in that 5 dots, let us say 2 dots are very beautiful, 3 are normal looking. So now you are supposed to introduce your dot to your friends. Which dot will you introduce? The 2 which are very beautiful or the normal ones? Which are very beautiful, you are telling?
Asking to whom should I?
Friends.
Even 2, the one which are very
So 2 who are very beautiful. Don't you think there is a risk? If that boyfriend, if your friend is very good looking, that dot will go. So if you get an opportunity to introduce, whom will you introduce? It depends on whom we are showing, sir. If that friend is only like a goobe, then of course, whichever person I take, it does not matter. Hey, what does this mean, sir? What does this mean, sir? If I have 5 self-occupied property, can I say I can claim exemption only for 2 properties? And remaining properties will be deemed to be let out. If I have 5 self-occupied property, only for 2 self-occupied property I can claim exemptions. Remaining property should be treated as deemed to be let out. Now the question is, which 2 properties should I call as self-occupied and which properties I should call as deemed to be let out? Yeah, you understand? Which 2 properties should I claim the exemption and which are the properties whom I should call deemed to be let out? That is what this concept is going to teach us. Okay, yeah. Let us say I have now please note, I have 3 properties. All the 3 properties are self-occupied. I have 3 properties and all these 3 properties are what, sir? Self-occupied. I have 3 properties and all these 3 properties are self-occupied. Let us say one is in Bangalore, one is at Chennai, and one is at Coimbatore. All these 3 properties are self-occupied. Have I given these properties on rent? No. All these are self-occupied. Whenever I am in Bangalore, I stay in my Bangalore house. Whenever I am in Chennai, I stay in my Chennai house. Whenever I am at Coimbatore, I stay at my Coimbatore house. Now, all these 3 properties are my self-occupied property. Okay. Now, I know that in this only for 2 self-occupied property, I can claim the exemption. Exemption means for which I will not have to do any computation of income from house property. But remaining property should be treated as deemed to be let out. Correct, not correct? So what are the possibilities which I have? Can I say case number 1? My case number 1 is treat my Bangalore house as self-occupied, treat my Chennai house as self-occupied, and treat my Coimbatore house as deemed to be let out property. That is possibility number 1. Chennai and Bangalore self-occupied, Coimbatore DLOP. Correct? No, that is possibility number 1. Possibility number 2 is what? I treat Bangalore SOP, Chennai I'll treat it as deemed to be let out, and Coimbatore I'll treat it as, because please note, I know that I can claim exemption for 2 properties. So what is happening in second case also? I am claiming exemption for 2 properties, and one of the property is what, sir? Deemed to be let out. Can I say there is one more possibility? Bangalore deemed to be let out, self-occupied, and Coimbatore also self-occupied. Is there any other possibility?
No.
Correct. There are only these 3 possibilities. Meaning, because I have 3 houses, one of the houses I should always treat it as deemed to be let out. Though it is a self-occupied house, one of the houses I will always have to take it as deemed to be let out. Other 2 houses I can claim as self-occupied. I can claim the benefit of self-occupied. Now the question is, which one will you take? Which case will you follow? Case 1, case 2, case 3. Which will you follow? And please note, if it is 4 properties, there will be 16 cases like this. Problem will happen in life. If it is 5, 25. So computation will be increase in examination. So now in this, which case should I take? Case 1 you are taking. Why case 1 you are telling? Now first I purchase this property.
Sir, we compute everything as SOP. Then we also compute everything as DLOP. Then we'll know which is more profitable for us.
Now, what is telling is partially right. What I should do in my life, sir? Do the computation in all these 3 cases. Treat house 1, house 2 as self-occupied, house 3 as DLOP. Check what is the answer you are getting. Check what is the answer you are getting. Then same, Bangalore and Coimbatore you take it as self-occupied, and Chennai you treat it as DLOP. Compute. Check what is the final answer you get. Final answer is this plus this plus this. So what is the final answer you check. Now, in the final answer, in our income tax law, when will you be happy? When you are paying more taxes or less taxes? So when will you pay less taxes? When you earn more or you earn less?
Income from tax properties less.
So what is your aim in life? To pay less tax or more tax?
So
To pay more tax you should. Why you should pay more tax? My earning is more. Correct, not correct?
so
Now please know, we have to do, ignore about what we have to do in life. But here, in which of the case, see, in whichever case my income is highest, can I say that is a bad option? Why, sir? If my income is high, I have to pay high taxes. So I should do this computation, total this, and in case 1, case 2, case 3, I should see what is the total of case 1, case 2, case 3. Whichever case the total is, or the income is least, that option I will select. A puri, not puri. Whichever case the income is least, that option will be selected by it. Is it clear? Now, how should I compute, sir? Sir, if I do like this, no, sir, I will have to do computation 3 times. And 4th step will be conclusion step. Please note, if I do like this, case number 1, I'll have to compute SOP. Meaning, I'll do what, sir? Particulars, SOP, DLOP. Correct? Municipal value of air, rent, etc. All Italy, vada, sambar, I'll have to write. This I'll have to do 3 times. And then I will have to give my conclusion, which is the best option. Best method is what, sir? How to solve this question? Step number 1. Step 1 is calculate income from house property, assuming all the properties are self-occupied. First, you do the computation for all the houses, assuming what, sir? They are all self-occupied. Step 2, calculate your income from house property or compute your income from house property, assuming all are deemed to be let out. First, calculate as if all are self-occupied, calculate as if all are deemed to be let out. And step number 3, select the best option. If first you should compute as if everyone is deemed to be let out, then you should compute as if everyone is first self-occupied, then let out. Sir, by this, how do you feel that my working will decrease, sir? When you are going to treat everyone as self-occupied, you don't have to start from municipal value. You can directly start with NAV, taking NAV as 0, 0, 0. Correct? If I do it case 1, case 2, case 3 separately, because one of them is DLOP, I will have to write from the beginning municipal value for area and whichever is higher, etc. Correct? So first calculate as if all are self-occupied, then calculate as if all are deemed to be let out. Now, then from these figures, whatever figures you have got over here, put it in these boxes. What if first house is self-occupied, second house is self-occupied, third house is deemed to be let out? What is your final answer? Self-occupied, DLOP. So which amounts will I take? For first house, I'll take self-occupied. For second house, I'll take DLOP. And for third house, I'll take self-occupied. Have you understood this? What if there are more than 2 self-occupied property? You can claim exemption only for 2. Remaining will be treated as deemed to be let out. So you should find which is the best option. The best option is that option where my income is minimum. Okay. Best option is that where my income is minimum. You're writing something up. Or write it, just write the ending and write this how to solve it. Yes, sir.
For 12, I got whatever.
Arun and yeah, what is the answer, sir?
1,39,500 each.
Right answer. Correct.
Sir,
Right answer. Yeah, it is right. 1,07,000. All these answers are.
chocolate.
Oh, chocolate. You gave the right answer. Wait, but some girls had sent me photos. I'll check whether their answers are correct. What am I searching for? Saubarnika. Your interest calculation is wrong, Sundari. Someone gave the answer telling she's online student. Chocolate, I'll get some. you don't want chocolate, I have one more. Chocolate, if you want, I'll get tomorrow. It is fine.
Ah.
You done? Copy?
Yes, sir.
Then you should tell no go ways. Tell me the answer for question number 10. Bhagya. Question number 10. Answer you should tell me. Final answer.
House 2 will be here.
Final answer.
Fine.
Income. What is the net income?
Option 1.
No. Whichever option you are telling is the best option. What is the net income for?
Okay. Next option is 18,840.
1,840. You will see, sir. What is the answer for option number 3?
Sir, I have a shuffle though. You tell me the
DLOP, SOP, SOP.
SOP. Maximum 19,800.
19,800. Yes, sir. Someone was telling. Right, sir. Sriram, what happened, Sriram? Ask me. Sir, what is you are asking or he is asking? What happened? Today, okay. So yesterday you were absent in way.
Coming.
Some-
Election.
Online also class goes well. Online you understand.
Yeah.
So how do you say ipoda vare? Na ipoda vare. Ipo is today. Now. Ta vare. Done. Murli. Option 2 option. Murli, right answer, Murli. Okay, shall I do it now? Ganesh has 3 houses. All the 3 houses are self-occupied. The particulars of the houses for the previous year 24-25 are as under. House 1, house 3, house 2, house 3. So all these houses are self-occupied. Municipal value 3 lakh, 3 lakh 60,000, 3 lakh 30,000. Fair rent they have given, standard rent they have given, date of completion of construction they have given, municipal taxes they have given, interest on loan they have given for repairs, and interest on loan for what is this? Interest on loan for the purchase of house property. Suggest which houses should be opted by Ganesh as self-occupied, so his tax liability is minimum. So how should I do the computation? Compute the income as if all are self-occupied. So answer to question number. Question 10. Step 1. Computation of income from house property if all are self-occupied. Particulars: house 1, house 2 and house 3. When the property is a self-occupied property, can I directly start with NAV? Why? Because I know for self-occupied property NAV will be 0. Correct? From that I'll subtract 24A standard deduction. Will I have any standard deduction? Because net annual value is 0, standard deduction also will be 0. And I'll subtract 24B interest on loan. First house there is no interest. Second house the interest is 55,000 but for repairs. Therefore how much will I take for self-occupied? 30,000 rupees. For self-occupied repairs purpose interest is how much, sir? 30,000 and 1,75,000 for purchase of house property. So my income from house property is 0, 30,000 negative, 1,75,000 negative. This computation we are doing assuming all are self-occupied. Is this our answer? No, this is not our answer. Our answer will be selecting the best option. So step number 2 is what, sir? Computation of income from house property if all are what? Deemed to be let out property. Particulars: house 1, house 2 and house 3. Municipal value, fair rent, whichever is higher should be compared with standard rent, whichever is lower. That will be my expected rent, that will be compared with my actual rent, and I'll take whichever is higher. That is my gross annual value. From that I'll subtract my municipal taxes. I'll get my net annual value. From that subtract 24A standard deduction. Why will I? Book you sourced deviation. 12th standard statistics books you took. 24B interest on loan. House 1, what is municipal value? Municipal value 3 lakhs, 3,60,000 and 3,30,000. Compare that with fair rent 3,75,000, 2,75,000, and 3,80,000. Whichever is higher is 3,75,000, 3,60,000, 3,80,000. Standard rent is 3,50,000, 370 and 375. Whichever is less is 3,50,000, 3,60,000, 3,75,000. Therefore, JB is how much, sir? 3,50,000, 3,60,000, 3,00,000. Sir, why have you not written actual rent? This self-occupied property. Municipal taxes, have they given municipal tax rate? Yes, sir. 12%, 8%, and 6%. So municipal taxes will be mine. 36,000, 28,800, and what, sir? 19,000. Net annual value will be 3,14,000, 3,31,200, 355, 200. Standard deduction is how much? 94,200, 99,360, and 1,06,560. Income from house property, if all are deemed to get out, will be 2 lakh, 19,800, 17,640, 640. Minus which is minus 76 people. CA interclass. CA interdisease. Yes, sir, you are telling something. Done. House 2. Let out prop. You tell me something. No, you put these amounts in these boxes. What is the final answer you have got? $43,640. Is this copied? Minus 1840. Minus 1840 plus 1840.
Plus 48.
Interest maximum you can claim only 2 lakh. Case 3. Now please see. Now we have done the computation. Now what should I do, sir? Using that computation, this Final answer I will get. Step number 3 is what, sir? Selecting the best option. How will I select the best option? I'll put SOP, DLOP figures. So if house number 1 is house 1, house 2, house 3. If house number 1 is SOP, what is the answer? 0. Correct? I'll write that. 0. If house 2 is SOP, 30,000 negative. If house 3 is DLOP, 73,640 rupees. So what is the net answer? Net income from house property. For case 1, it will be 43,640 rupees. Then case 2, house 1 SOP, house 2 DLOP is 17,840 and house 3 DLOP is 1,75,000. Sorry, house 3 SOP is 1,75,000 negative. So what is the net answer? 1840 is the answer, positive. House 1 DLOP is how much? 2,19,800 plus this is 30,000 negative and house 3 is 1,75,000. Sir, how are you writing the amount? Array, simple. See, house 3 is DLOP. So house 3 DLOP. Answer is 73,640. So what am I doing? I am writing that amount over here. House 1 is DLOP. This is the answer. House 2 is SOP. This is the answer. House 3 is SOP. This is the answer. So now what I should do? Net answer. Net answer is what, sir? 19,800 rupees. Why, sir? This comes to 2,05,000, but it is restricted to 2 lakh rupees. Which one? Best option. Everyone in par, I'll repeat. See, you understood this calculation. Now please note, there are 2 methods of doing. Either do this lengthy method wherein case 1, case 2, case 3 and whichever answer is least you take that, or this second method, which is first compute the income if everyone is SOP, compute the income if everyone is DLOP. So if everyone is SOP, what will be the answer? I can directly start with net annual value. Why, sir? For self-occupied property, the net annual value will always be 0. So I can directly start with net annual value, taking it as 0, then claim deduction, standard deduction, and then claim interest on loan. I'll get some amount. So this is the figures which I have got. Income from house property for house 1 will be 0, house 2 it is 30,000, house 3 it is 1,75,000. Then I am recomputing the same thing, assuming everyone is deemed to be let out property. What will be the answer if all are deemed to be let out property? Then if all are deemed to be let out property, then for house 1 it will be 2,19,800, house 2 1,76,840, house 3 70,640 rupees. Now this calculation part you have all understood. Everyone has understood. Now we should select the best option. Now I know I can claim only 2 self-occupied. Correct? Now I know I can claim only 2 self-occupied. Now which will you claim? Let us say first, right? Let us say case number 1. I'll claim my first 2 houses as self-occupied. If I claim my first 2 houses as self-occupied, my third house should be compulsorily deemed to be let out. So if I claim my first 2 houses as self-occupied, my answer will be negative 30,000. Correct? The total answer will be negative 30,000. And I'm claiming my house 3 as deemed to be let out. What is the answer for house 3? 73,640. If I take house 3 as deemed to be let out, the answer comes to 73,640. Now, if I select this option, meaning if I select which option? Taking first 2 houses as self-occupied, house number 3 as deemed to be let out, my net income will be 43,640 rupees. My net income will be what, sir? 43,640. Sir, how did you get this? Array, first two houses self-occupied. This is the answer. House number 3 is deemed to let out 73,640. What am I doing in that? What am I doing over here? You ignore this for the time being. You ignore what, sir? You ignore all the other things for the time being. You just see. Case number one, what am I doing? Case number one, house 1 I am taking as self-occupied. Answer for house 1 self-occupied is 0. House 2 I am claiming as again self-occupied. Answer for that is negative 30,000 rupees. Sir, where did you get this from? From this calculation. Okay, I put that amount over here. And house 3 I am claiming it as deemed to be let out. If house 3 is deemed to be let out, what is the answer? 73,640. Add all of this together. What did you get? 43,640 rupees. So if I take house number 1 and house number 2 as self-occupied and house number 3 as deemed to be let out, my net income will be 43,640 rupees. Okay, my net income will be how much? 43,640 rupees. Same thing I have to do now by taking house 1 and house 3 as house 1 and house 3 I am taking as self-occupied. So if my house 1 is self-occupied, my income from house property for house 1 is 0. If house 3 is self-occupied, the income will be 1,75,000. Sir, how are you getting these figures? We have done the calculation. Now that I am just putting in this, whatever calculation I have done, I have just put those figures in this. And if my house 2 is DLOP, my answer will come to 1,76,840. Now what am I doing? I am just totaling this. So when I total this, what is that final answer? 818,400. Same thing I am doing for this case also. But in last case, what is happening? House 2 and house 3 is taken as self-occupied. Now the total interest which is coming is 2,05,000. But I know for all the house properties combined together, I can claim maximum interest only of 2 lakh rupees. Therefore, I am taking interest of 2 lakhs, adding it to DLOP figure. I am getting 90,800. Okay, not okay? Conclusion. Option 2 is the best. Where house 1 and house 3 are self-occupied and house 2 is deemed to be let out. House 2 is what's the deemed to be let out property. Nirmal says, sir, why are you not claiming repairs under deduction? Because you are not revising. Or you are not regular, of course. Both the possibilities are there. Is it done? Now only a few theoretical points are there in this chapter, and this chapter is done. Now there are small points on this topic. And this topic is done. Now, do you know there is something called as composite rent? What do you mean by composite rent? House property is rented with other assets. If the house property is rented with other assets, then the rent which you receive is called as composite rent. If your house property is rented with other assets, the rent which you get now is called as composite rent. So, for example, let us say I have rented a house to Kamesh. I have rented a house to Kamesh with a maid. I have rented a house with furniture, meaning sofa is there, TV is there, AC is there, fridge is there, fan is there, everything is there. Okay, so I am renting the house with wardrobe, etc., with furniture. Now, when I am renting a house with furniture, the rent which I am going to receive, that rent will be called as composite rent. What is composite rent? Renting of a house property with other assets. Composite rent is renting of the house property with other assets. Now, when I rent a house with other assets, the rent which I am going to get will be for house plus for other assets also. Now, lawmaker says, Dilip, you have rented a house. Dilip, you have rented a house. Now, this house which is there, I have rented with furniture. And I am charging a rent of rupees 25,000. Now, there are two possibilities. I tell my tenant that, see, sir, 15,000 rupees is for house and 10,000 rupees is for furniture. Meaning, I have rented a house property with assets, wherein I have told that person that for house I am taking 15,000 rupees and for other things which are there in the house, for that I am taking how much, sir? 10,000 rupees. Meaning, what is happening? The rent which I am receiving, the rent towards house property and the rent towards other assets are separable. I can separate it. If it is separable, then whatever rent you are receiving for the house will be taxable under income from house property, and whatever rent you are receiving for other things, it will be taxable under other sources. But if it is your business, it will be taxable under business or profession. Sir, what if I cannot separate it at all? I have given the house with furniture. I don't know how much is for furniture, how much is for other assets. What will happen in that case, sir? If you cannot separate it, lawmaker says that rent will completely go under income from other sources or business. Or if composite rent is not separable, then it will not be taxable under income from house property. Entire thing will be taxable under income from other sources. Is it clear? Composite rent. Together with rent of a building, if the owner gets charges or for other services or rent of other assets provided in the building, that is furniture, machinery, amount so received is called as composite rent. Composite rent is rent of building with rent of other assets. Now, what is the treatment of composite rent? Tax treatment for composite rent. Income from composite rent is separable, meaning you can separate the income from composite rent. Then the rent of house property will be taxable under income from house property. Whatever rent you receive from house property will be taxable under income from house property, and the rent for other assets or services will be taxable under PGBP or business. For other things, it will, if it is your business, it will be under PGP or it will be taxable under other sources. Income from composite rent is not separable. The total rent, if it is not separable, then the total rent will be taxable either under business or under other sources. Now, if you remember that day I was giving examples of PG, correct? In case of PG, whatever amount you are paying, that is for room as well as other things. So the entire rent, is it separating how much is for room and how much is for food, etc.? No. So entire rent which you are paying will go under, it will go either under other sources or under business. For PG people, can I say that is only their business? So it will go under business. If it is not your business, other sources. Similarly, I am taking a hotel on rent. Hotel room I am taking on rent. their other things will definitely be there. So entire income will go under business or others. Now please note, see this point. This is a beautiful point. Note, if the let out of a house property is not possible, if you cannot let out the house, if the let out of the house property is not possible or not acceptable to the other party, either it is not possible to rent the house to someone else, or it is not acceptable, meaning if the other party to whom you are renting the house property is not going to accept that without other assets, or services, then total rent, the full amount of rent shall be taxable either under business or other sources, whether the composite rent or agreement is separable or not, irrespective of whether you can separate the agreement or not. For example, I am taking a hotel room on rent. Now that hotel fellow says, sir, see sir, if you want only room, price is 1,000 rupees. If you want room, bed, sofa, all these things, etc., price is 5,000 rupees. Now, will you take that room, only that room place? Will you accept? When I say hotel to you, what comes in your brain? Sir, facilities will be there. There will be a bucket given, sir. There will be a washroom which will be there, sir. So there will be some facilities which is given. So what is happening over here? If it is not possible to rent the house property with other assets, without other assets you cannot rent only. A hotel room you cannot rent only. A PG you cannot rent only without other assets. Then the total rent will be taxable either under business or other sources, irrespective of whether he is telling, sir, I am charging this much for house property, this much for other assets. Even if he tells that if that property cannot be rented without other assets, total rent will go with rent will go where, sir? PGP or other source. For example, PG hotel rooms, auditorium also will be rented with chair, mic, desk, etc. will be there. Okay, not okay? Point number 2. House property is held as stock in trade. If house property is held as stock in trade, meaning for me that house is what, sir? Is stock. For whom the house will be treated as a stock? If I am into real estate business, if I am a builder, or if I am a person who is involved in buying and selling houses, etc. So in such cases, how do I treat, sir? Lawmaker says, whatever income you are getting by selling a house property, again, whatever income you are getting by selling a house property will be taxable under PGBP. It will be taxable under PGBP. Why, sir? Because for me that is a stock in trade. So whatever income I am going to get, that is my business income. And whatever income I get by renting a house property, that will be taxable under income from house property. It is that example, if you remember, I had 10 flats, 2 flats were unsold. Because these unsold flats are there, that is my stock in trade. This I gave on rent. Now these unsold flats which are given on rent, that rent will be taxed under income from house property. Whatever flats are sold by me, for that income will go under business or okay, not okay. Now lawmaker says, Mr. Dilip, let us say you are a builder. I am Priya Builders. Okay, normally what builders do is, after building, they'll always keep 1 or 2 flats for themselves. In that constructed property, always they will keep 1 or 2 flats, they'll always keep for themselves. They'll keep it for themselves so they can use it for future purpose, or they'll keep just, okay, this is my building, I should have 1 flat of mine. So lawmaker says, as a builder, your main job should be to sell the flats. Now, if you have any flats which are unsold, as a builder, your main job should be what, sir? To sell the flats. But if you have any flats which are unsold, then I will wait for 2 years. I'll wait for how many years? 2 years. Up to 2 years, I will not say anything. But even after 2 years, if you are not selling, I have a problem. Government is telling, I will wait for 2 years. I'll wait for 2 years. Up to 2 years, if you are not selling, no problem, because I understand some stocks will be there which are not getting sold at all. I understand that. But even after 2 years, if you are not selling it, then I have a problem. I am going to assume that it is a let out property. This will be treated as deemed to be let out property, and you will have to pay taxes under income from house property. Did you understand this point? Where the house property is held as stock in trade and it has not been let out during the previous year. If it is held as stock in trade, if you are a builder, that house is held as stock in trade and you have not let out it during the previous year, you have not given it on rent also, then the NAV of such house property shall be taken as nil for a period of 2 years. If NAV is taken as 0, that means I am going to treat it as self-occupied property for a period of 2 years. And from the 2 years from which date, sir? 2 years from the end of the financial year in which the construction was completed. For example, if the construction is completed on 28th July 2024, what is the end of this financial year? From here I will calculate 2 years, which is 31/3/20. After that, you will be deemed to be let out. Yes, sir. Now, I am a non-resident person. I am a non-resident person. You know non-resident? Non-resident means? Non-resident.
Not less than 182.
Now please see. We have studied a topic called as residential status. We understood that you can either be resident and ordinary resident, resident but not ordinary resident, non-resident. Now tell me, if the house is in India, okay, there is a house in India, there is a house in London. If the house is in India, whatever rent I am going to get from this house, is it an Indian income or foreign income?
Indian income.
This will be treated as Indian income.
Yes.
So this rent will be taxable for whom, sir?
For all three.
Can I say if the house is in India, then the income which I am going to get is called as Indian income, and therefore it will be taxable for resident, ordinary resident, resident, not ordinary resident, and
It's not.
non-resident. It will be taxable for everyone. If the house is in London, then it will be taxable for, it is Indian income or foreign income?
For
So if it is foreign income, it is taxable for whom, sir? So it will be taxable only for resident and ordinary resident. Can I say, correct? Whatever you have given answer till now, it is perfectly right. Can I say the house which is there in London will be taxable for resident but not ordinary resident, and it will be taxable for non-resident in India if the rent is received in India?
yes.
Or deemed to be received in India? Because if it is received or deemed to be received in India, though the property is outside India, it is an okay, not okay. Is it clear? If the house property is located outside India for resident and non-resident. If the house property is located in India, taxable for everyone. Income from such house property is always taxable in India whether a person is resident or not a resident, because it is Indian income. If the house property is located outside India for resident and ordinary resident, the income from house property will be taxable in India whether it is received in India or not, because you are resident or ordinary resident. And if you are a non-resident or if you are a resident but not ordinary resident, income from house property will be taxable in India only if it is, because if it is received in India, then it is a Indian income. A Puriya. Everyone clear this? Now, I think we have 2 questions left over in this topic. Yeah, have you solved this question? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11,
Yes.
12 I have given as homework, 13 and 14. 12 and 14 we have to solve. We will first solve this question, easy question. I'll read the question for you. Mr. Obama, being a past students. Mr. Obama, a citizen of US, is a resident but not ordinary resident. So if you are a resident but not ordinary resident, which house properties income will be taxable in India? Received in India, or if the house property is in India? If the house property is in India, definitely taxable, and if it is outside India, if it is received in India, then it is taxable. Mr. Obama is a resident and ordinary resident in India during the financial year 24-25. He owns 2 house properties in USA. In USA, how many houses he has? 2 houses. One is used for his residence. So one is used for his residence. That means one is self-occupied property, and another house property is rented for a monthly rent of $18,000. Pay rent is $20,000, and value of $1 is equal to 78 rupees. So they have given some amounts like this. So I have in US, I have 2 houses. One is self-occupied, one is let out property. He took ownership and possession of a flat in Delhi. When did he take? On 1st of October 2024, he took a house in Delhi, which is used for self-occupation. Which is used for what purpose? So in India, he has a house. Where is the house? The house is in Delhi. It is a self-occupied property. The flat was used by him for 3 months at the time when he visited India during the previous year 24-25. Municipal value, fair rent, they are given. So can I say this is not relevant because it is self-occupied? For 2 properties, I can claim exemption of self-occupied. One property is in US, which is self-occupied. One property is in India, which is self-occupied. Correct? No, I can claim exemption for 2 properties. No problem. Now they are telling he paid property tax of 13,800 and 2,800 of sewerage tax to municipal corporation. Now, when we take municipal tax, no, we should take both of them. Municipal notes you have written yesterday. Municipal taxes are also called as property tax, sewerage tax. Municipal taxes notes you have not written.
You said like local authority levying tax.
Municipal, that is municipal value.
It is tax levied on a house property by the municipal.
Payment basis.
It is allowed on payment basis.
Right, one point. It is also called as municipal value. Sorry, municipal, what is that? Right, the first point. It is also known as house tax, property tax. It is also known as municipal value. It is also known as house tax, property tax, sewerage tax, local tax, also known as house tax, sewerage tax, local tax. Okay, this is one more name. So if they give more than one information in the question, that means like they have given property tax is this much, sewerage tax is this much, so total municipal taxes will be 16,600 something. Now further, what do they say? In past students, he had taken a loan of 18 lakh rupees at 9.5% from HDFC on 1st of August 2021 for purchasing this flat. Amount is repaid by him till 31st. No amount has been repaid by him till 31st of. So he had taken loan on 21st of August 21st, and he purchased the flat venture on 10th of October 24. Please note, this loan was taken for Delhi house. Okay. Now after this, so this say, please see, in this question, this is one information. Then till here is the second information. So this is information number 1, information number 2, and now starts information number 3. He also has a house property in Bangalore, which is let out on a monthly rent of 40,000 rupees. So he has a house property in Bangalore. In India also he has 2 houses. One house is in Bangalore, which is a let out property. Can I say no problem? Because for 2 are let out and 2 are self-occupied. Can I say this I will ignore because it is in US, and this also I will ignore because that is US. I should do the computation only for the property which is in India. This rent, if it was received in India, I would have computed for that also. They have not told. Have they told that it is received in India? No. So you should not make an assumption it is received in India because he is not an Indian only. Okay. So what is this? He also had a house property in Bangalore which is let out for a monthly rent of 40,000. The fair rent is 4,58,000, municipal value is 358, standard rent is 4,20,000. He has taken a loan of 25 lakh rupees at 10% from one of his friend residing in US. Municipal taxes is 5,400 paid by him in respect of the house. Compute the income chargeable under the head income from house property for calculate. Yes, sir.
Interest sum for the BCP income.
You tell me, sir.
Two answers.
You already computed. How did you compute?
Assume that USC and LOP, I mean USC is SOP and LOP not received.
No, when did you compute? I to just now discuss this question. Okay, you will see. I'll wait for others' answers, then I'll take your answer. First, I'll take others' answer. Those who give first answer, I don't take it. Like when Dayan or Bhagya is also given, I don't take their answer unless until others are.
You tell me this only.
Yes.
Income. BCP income.
Yes.
I have this.
Rajeshri, you have no idea what he's talking about. Huh? Uh-uh. I don't know, sir. Yes. Neeraj, you didn't attend yesterday's class. Done. Okay. Mr. Obama particulars, we have Delhi house and we have Bangalore house. Correct? So my municipal value, pay rent, whichever is higher, compare that whichever is higher with standard rent and take whichever is lower. That is my expected rent. I'll compare that with actual rent and take whichever is higher. That will be my gross annual value less municipal taxes. I'll get my net annual value less 24A standard deduction, 24B interest on loan. I'll get my income from house property. Now see, for Delhi house, can I say I can directly start with NAV, taking NAV as 0. Standard deduction will not be there. We have only interest. For Bangalore house, they have given all the information. So what is my pay rent? 4,58,000. Municipal value is 3,58,000. Whichever is higher is 4,58,000. Standard rent is 4,20,000. Whichever is less is my expected rent. My actual rent is 40,000 rupees per month for 12 months. How much? 4 lakh. So my gross annual value will be 4 lakh. Municipal taxes will be how much? They have given municipal taxes to be equal to 5,400. They have given in the question 4,70,000. Then standard deduction will be 30% of this, which is 140.
42,080.
And how much is interest on loan? 25 lakhs into 10%. Loan was taken. Have they given date of taking loan? They have not given. So I'll directly take 2 lakh.
50,000.
My income from house property is
82,000.
this is for which house, sir? House number? Obama. Bangalore house. Now, in case of Delhi house, interest calculation is there. Nothing else is there. Correct? No. What are they telling? Delhi house, he took the possession of Delhi house on which date? 1/10/24. But the loan was taken on which date? 1st of August 21. But the loan was taken on 1st of August 21. So here, loan was taken 2-3 years back, but purchase was happening this year. So what will come, sir? Pre-construction period will come. How, sir? I'll tell. Please, Ingebar. See, in 21-22, I took the loan. Yeah, August 21-22. Then we have 22-23, 23-24, and 24-25. Now, in this year, purchase got completed. Correct? Now, therefore, whatever years are there before this will be called as my pre-construction period or pre-acquisition period interest. A construction includes acquisition also. Pre-acquisition period interest. So, for these 3 years, he would have paid some interest. When did he take the loan? 1st of August 2021. What is the interest loan amount? 18,000. So, for first year, how much interest he would have paid?
1,14,000.
For first year, he would have paid. Loan amount is 18 lakhs. Huh?
9.8 divided by
Which is 1 lakh.
14,000.
And for second year, he would have paid. August Sala Sundari. July to March is 9 months. Yeah. August, September, October, November, December, January, February, March. Now, second year, how much is the interest, sir?
1,71,000.
1,71,000. And third year also, because he has not paid anything, the interest will be same 1 lakh. So these three interests combined together is called as what is this interest called? The total of this is pre-construction period interest, which is yes, sir.
Before the year of construction, right? So 2023 until 22-23 is our construction year, right?
He purchased on 1st of October 2024.
24-25.
So that is in this year. All the years before this is.
Okay. Same. 3 months.
And for this year, what is the interest, sir? So if I divide this by 5, so 91,200 I can take for all the years. For the current year, my loan amount is 18 lakhs into 9.5%, which is 1,71,000 plus my share of pre-construction period interest, which is 2,62,200. How much interest can I claim maximum?
So the loss is 1,17,000.
So for this house, my net income from house property is how much, sir?
Net loss
1,17,000.
1,17,000.
780 rupees is the loss. Correct answer.
I also
1,70,780 is the answer. By this question, what did you understand? Question will never tell you that I have pre-construction period interest in me. You should read the question and understand that. So only I made you write like that, construction period or acquisition period interest. clear?
Yes, sir.
Now we'll do that homework question which was there. Now see, I'll read this question. Very nice question it is. Two brothers, Arun and Bimal, are co-owners of a house with equal share. There are two brothers. What are their names, sir? Arun and Bimal. They are co-owners of a house with equal share. The property was constructed during the year 98-99. The property consists of 8 identical units and is situated at Cochin. So let us say this is my house. Let us say this is the house. It has two parts. One, two, three. What is the question telling? The question says it has 8 identical units. Do I have 8 identical units? And they say it is of equal share. So Arun has 4 units, Bimal has 4 units. Correct, not correct? 1, 2, 3, 4, 5, 6, 7, 8. Arun has 4 units and Bimal has 4 units. They are co-owners with equal share. The property was constructed during the year 98-99. When was the property constructed? During the financial year 98-99. The property consists of 8 identical units and situated at Cochin. During the financial year 24-25, 6 units were let out for rent for 15,000. So out of these 8 units, there are 6 units. What happened to the 6 units? These 6 units were rented by me. That means the 2 units are self-occupied. At a monthly rent of how much monthly rent I was collecting, sir? 15,000 rupees per month per unit. The municipal value is 10 lakh rupees. Municipal taxes is 20% of municipal value, which were paid during the year. Other expenses, repairs I'll ignore, insurance I'll ignore, interest payable on the loan which was taken for construction. Interest is important, loan for construction. One of the let out units remained vacant for 4 months during the year. So the house which you given on rent was vacant for a period of 4 months. Arun could not occupy his unit for 6 months as he was transferred to Chennai. No problem. If you are not occupying your house, that means it is a unoccupied. Unoccupied house is also a self-occupied house. He does not own any other houses. Compute his income from house property. Please understand this carefully. If you see this question has point number 1. What are the different concepts tested in this question? Point number 1, they have tested you partly let out, partly self-occupied. Correct?
Yes.
Now in this, no, let out portion is how much, sir? Can I say 6 by 8? I have totally 6 houses and 8 houses are, sorry, I have totally 8 houses, 6 houses are let out and self-occupied property is 2 by 8. Therefore, can I say 75% is let out and 25% is self-occupied? Now, partly let out, partly self-occupied is concept number 1. Concept number 2 is testing the concept of vacancy. What they have told in the question, that one of the house remained vacant for 4 months. So there is a concept of vacancy also which is tested. Then concept number 3 which is getting tested over here is the loan is before 1/4/1999. Though the loan is for construction, because the loan is before 1/4/1999, for self-occupied property you can claim only 30,000 rupees for each owner. And there is one more point tested which is co-ownership concept. Okay, not okay? Now I'll give you 5 minutes because I have explained the question now. Can you try it now? Is the question visible? Sir, one question they have asked, sir, if the income is negative, like in the previous case, how will it be treated in real life? How will this income be treated in real life? In your income tax return, there will be a loss. If I have a negative income, what is the meaning of that? That means you are making a loss. You are not earning anything in that year. So what will happen to this income, sir? If you are making any other income, for example, let us say I have a house property loss of 1,17,000, salary income of 5 lakh rupees. Adjust and pay tax on your net worth. So set off you can do. That will study later in our life. Fast. I'll give you 5 minutes. Area wise. Yeah.
you leave the self-occupied unit only.
Yeah.
Unit could not occupy.
Unoccupied is equal to self-occupied. Notes you have written it. Okay. Now, computation of income from house property. Particulars self-occupied and let out 2 by 8, 6 by 8 or 75%, 25% you can write. Municipal value, fair rent, whichever is higher, that you compare with standard rent and take whichever is lower. That will give you your expected rent, that you compare with actual rent and take whichever is higher. My gross annual value less municipal taxes, you will get your net annual value less 24A interest, 24B standard deduction and interest. Now, what is municipal value? For SOP, I'll directly start with NAV as 0. So, what is my let out property municipal value? See, they have given total municipal value is 10 lakh rupees. For let out property, it is only 75%. So, 10 lakh into 75% is 7,50,000 rupees. They have not given fair rent. Therefore, whichever is higher will be 750. They have not given standard rent. Therefore, expected rent is 750. Now, see what is my actual rent. Actual rent is 15,000 into 12 months into 6 units. Correct? 15,000 into 12 months into 6 units minus 15,000 into 4 months into 1 unit. Why, sir? Because 1 unit was vacant for 4 months. First, I am taking for all the 12 units. 1 unit is vacant for 4 months. I am subtracting that. What is the amount coming?
10 lakh.
10,80,000. Now, here we can see that anyways actual rent is more than expected rent. So, I don't have to compare that actual rent plus vacancy rent, etc. Because anyways that is higher.
Actual rent is 1 lakh 20,000. 10 lakh 20.
Actual rent is 10,20,000 rupees. Municipal taxes is how much, sir? They say 20%. 7,50,000 is my municipal value.
1 lakh
7,50,000 into 20%. I'll take only for let out property, which is 1 lakh
1 lakh 8 lakhs 70,000.
8,70,000 rupees. Standard deduction will be
2 lakh
2,61,000
61,000.
rupees. Now, please note everyone in par, everyone. Interest is the important calculation. Working note number 1. Interest on loan. What is my total interest?
All 8.
3,60,000 is my total interest. This I'll have to divide between let out and self-occupied. So for self-occupied, how much, sir? And for let out, how much, sir? For self-occupied, it is 6/8. Self-occupied, it is 2/8. Let out, it is 6/8. So 3,60,000 into 2/8, the interest comes to 90,000, which is Arun's share is 45,000, Bimal's share is 45,000, and here you will get remaining 2,70,000 rupees. Here also Arun's share is Bimal's share. How much? Now please note, the loan was taken during 98-99. That means loan was taken before 1/4/1991. 1/4/1999. Therefore, maximum for self-occupied I can claim is only. Yeah, you understanding? Low it is 45,000. If the loan was taken after 1/4/99, I would have taken the entire 90,000 rupees. But here, because the loan was taken before that date, I am taking 30,000 rupees. Now, please note, in case of co-ownership, each co-owner will get that interest limit. So here I'll take Arun and Bimal, 30,000, 1,35,000. So my income from house property is
3,39,000.
60,000 negative and
3,99,000.
3 lakh
39.
39,000 rupees.
Difference
My net income from house property is 2 lakh,
79,000. Each 1,39,500.
wherein Arun's share is 1,39,500 and Bimal's share is 1,39,000. Copy follow. Done? Now, okay, the last point for our discussion is what do you mean by owner, sir? Owner means what, sir? Owner. Lawmaker says owner includes under house property owner definition which is there. No, it is an inclusive definition which says owner includes legal owner. Legal owner means the person in whose name the property is registered. Beneficial owner means sometimes what may happen is the property may be in the name of a trust. Let us say my grandfather wanted to give the house to me, but I was a minor. Because I was a minor, the property could not be transferred to me. Okay, so he gave the property to a trust and they told the trust that beneficiary is Mr. Dilip. Once he turns 18 years, you please give the property to Mr. Dilip. So here I am the beneficial owner. So legal owner is in whose name the property is registered. Beneficial owner means what, sir? The person who is having the rights in the property, who is getting the benefits of that property. And there is one more concept called as deemed owner. Deemed owner means he is not actually the owner, but we are going to assume that this person is the owner, deemed owner. We are going to assume that this person is the owner. Sir, why interest is taken only 30,000 Sri Sai Baya? Because the loan was taken before that date. If you remember, 2 lakh limit is if the loan is on or after 1/4/1999. Now, one more concept is what's the deemed owner? Deemed owner, section 27 gives the meaning of deemed owner. Meaning here we are not, he is not actually the owner, but we are making an assumption that this person is the owner. So there are different cases. One by one, we'll see all the cases. Case number 1. If you transfer a house property, a transfer of house property by an individual to his or her spouse without consideration or for inadequate consideration. In such cases, the individual will be considered as deemed owner. Meaning what, sir? I have a house property. Okay. Now what I have done is, this house property I have transferred to my spouse. I have transferred this house property to my wife, and this transfer was made by me without any consideration, for free. For free, I transferred my house to my wife. Lawmaker says, why Dilip, why did you do like this? I said, see sir, I told lawmakers, see lawmakers, my salary income is 10 lakhs and from this house I am earning a rental income of 5 lakhs. So my total income is 15 lakhs. On 15 lakhs, I have to pay a tax of 2,62,500. So if I transfer the house to my wife, she will become the owner of the house. Correct? If I transfer the house to my wife, she will become the owner. Yes, she will become the owner. So who will receive the rent? She will receive the rent. So her income will become 5 lakh rupees and my income will now reduce to 10 lakh rupees. On 10 lakh rupees, I have to pay only 1,12,500 and on 5 lakh rupees, she has to pay no tax at all. So to evade taxes, I am doing this like this. Okay. Why am I doing like this? Because I want to make sure that my tax liability is removed. Now by doing this, how much tax I am saving? Almost 1,50,000 rupees. Hey, please note. Before I had to pay 2,52,000. Now I have to pay only 1,12,500. Almost 1,50,000 rupees tax I am saving by doing this particular transaction. Lawmakers, oh, you are smart. I'll make a provision now. I'll make a provision. I'll add a new law in the Income Tax Act, which says what, sir? If you are transferring your house property to your spouse without consideration or for inadequate consideration, I am transferring this house to my wife, 1 crore rupees house, I am transferring it only for 10,000 rupees. Either you are transferring without any consideration or for inadequate consideration, then the person who is transferring, that person will be deemed as owner of the property. Hey, who is the legal owner of the property? Wife, because I have transferred it to her. But I was the owner before transferring this. I transferred it without consideration. Lawmaker says you are the owner. Though she is the legal owner, I am going to assume that Dilip, you are still the owner of that. So if they are going to make that assumption, then the income which is received from that property will be taxable in my hands instead of my wife's. Okay, not okay? Transfer of a house property by an individual to his or her spouse without consideration or for inadequate consideration. In such cases, individual will be considered as deemed owner. Okay. Yeah. Now, however, there is an exception. Exception what, sir? If the transfer is in connection with agreement to live apart. Meaning,
Separate.
in case of divorce, no problem. In case of divorce, if you are transferring, no problem. Or you are not divorced legally. You are legally not divorced, but you are not staying together. You have an agreement between yourself only that I will not see your face, you don't see my face. You are agreeing not to live together. You have an agreement to live apart. For example, Narendra Modi, you know. Is Narendra Modi married? Now, Narendra Modi, is he married? Now, Narendra Modi is a married person. But we have not seen his wife at all, no, sir. Now, Narendra Modi, what did he do, sir? He got married at a very young age. Narendra Modi wife. Now you see, this person over here is Narendra Modi's wife. Now Narendra Modi got married very young age, 16-17-year-old. He got married purposefully. Their parents made him get married, and therefore after getting married, he wrote a letter to his wife. And I'm really very sorry. This was forceful marriage. I don't want to stay with you. I'm really very sorry. I want to serve my country. I cannot serve you. So he left. Okay, he left. He left his house only. He left his house only. He got married at a very young age. So he left his house. Now please note, are they divorced? But still they have an agreement that they are not going to stay together. That is what, sir? That is what, sir? Agreement to live. Okay. Second point. Transfer of a house property by an individual to his or her minor child. So if I am transferring my house to my minor child, except minor married daughter, please note, is major child included over here? No. If I am transferring the house property to my minor child without consideration or for inadequate consideration, in such cases, individual shall be treated as deemed owner. So if I transfer to my minor child, not being minor married daughter, okay, if I am transferring to minor child, lawmaker says, though the property is in the name of minor child, Mr. Dilip, you will be deemed as owner. Sir, why not major child? Lawmaker says, if you are transferring to major child knows how to do the computation, etc. He can do the computation, he has to pay the tax. But if you are transferring it to your minor child, I am going to assume that you are the owner, though the owner is minor child. If you are an holder of impartable estate, if you are a holder of impartable estate, the person who is holding that estate will be deemed as owner. Now, if you watch that KGF movie, what happens is that KGF, that place which is there, Kolar Goldfields, that is belonging to a person. That person has two sons. Those two sons are only below. Correct? No, they are waiting that let my father die and I will have control of the property and we'll both fight, etc. So what his father does before his death, entire KGF, he transfers to a trust. He says that this entire KGF, meaning let us say there is a house. There is a house which I have a house. Now I have 3 children. Now I know my children are useless people. Okay, I have 3 sons. All these 3 sons are useless people. I know that after my death, these people are going to fight or they are going to make sure that this property is sold and they'll take money. Now I don't want that to happen. So what I do, I transfer this house to a trust. I transfer this house to a. Now what will happen by doing that, sir? Now the owner of this house will become the trust. And I tell that beneficiaries of this property are my 3 sons. My 3 sons have the right to stay in this house. They have all the rights in this house, but they cannot sell the house. Selling right is not there with them. Okay, so these are the beneficiary. Now there is a trust which is created, which is holding this asset. Lawmaker says this trust will be treated as deemed owner. Okay, the holder of this estate will be deemed as owner. See, normally estate will come only upon death of a person. Okay, once a person dies, then an estate is created. So to take care of all the property which belongs to that person. Then member of cooperative society. Now in apartment, no. In case of apartment, you would have seen there are many flats, many houses, etc. Correct? So, sir, here in apartment, house property is the entire building or is house property one flat which is there? Lawmaker says each and every flat is treated as house property. Each and every flat is treated as house property. Now, for each and every flat, will I have any ownership document? See, basically land and the entire building will belong to a person. That person is called as that association. Okay, association will be created because that entire land and building cannot be named on a single person because there are so many flats, there are so many different owners in this particular building. So what they do is they create an association, they create a society. Okay, they create an association and the entire building along with land, etc. is transferred to that association. And each and every person in this house is the member of that association. For example, Rosy Towers Association is there, in the board is there, or if you watch TV in Hindi, there is one serial called as Gokul Dham Society. Something like this is there. Tarak Mayata Ka Ulta Sir. So each and every person over there is just member of that society. Okay, that entire place does not belong to them, but that house which they are staying, they are the owner of that house. Now, these people are getting something called as membership certificate. Okay, the ownership certificate which they have is a membership certificate. Now, lawmaker says if you are a member of cooperative society, the member will be deemed as owner of the property which is there in his name. Member will be deemed as owner though the property is in the name of association. Though the entire building is the name of association, because you are member of that association, that one single flat which is there that belongs to you, you will be deemed owner of that particular flat. Transfer of possession without transfer of immovable property as per Transfer of Property Act, as per TOPA. So there is an act called as Transfer of Property Act. Now under that act, there is a section called as 53A, some section is there. You don't have to worry about that section. Now that gives a situation wherein you can sell a house to someone without transferring the ownership. You can sell a house to someone without transferring the ownership, meaning I am the owner. What happens is, this normally happens in case of government. Okay, government will say government is planning to start a new area in this city. Okay, when the government is planning to make a new area, government is going to start allotting plots. Okay, they will allot plots. Normally the plots will be allotted based on you applying for that plot. Based on, I mean, there will be hundreds and thousands of people who will be applying, and only few people will be allotted that flat. That house will be allotted only to those people. Now let us say I got an allotment, and in that particular new area which government is making, I got an allotment of a plot. Now the condition which government keeps is you cannot sell this flat for a period of 10 years. Condition, government says I will give you the house, but this house or this plot which is there you cannot sell for a period of 10 years. Now what happens is, these properties are normally, when we take, when we buy it, because it is given directly by government, it is available at a very low cost. Let us say if the market value of the property is 50 lakh rupees, I'll get this property only for 20 lakh rupees. I get it for a very low price. So what happens is, people, they make this application, and based on their, some lucky draw will be there. Based on that lucky draw, if your name is there, you will get the property. So I got the property. Now I am in need of money, or there is a person who came to me. He told, Dilip, you have got a plot over here. No, Dilip, will you be interested in selling that plot? I said, why? Yeah, I'll give you good amount. I said, see, I paid 20 lakh rupees to government. What is the good amount you are going to pay me? He said, I will give you 30 lakh rupees. I said, get lost. I said, 30 lakh rupees, I will not sell it for 30 lakh rupees. He said, okay, I'll do one thing, Dilip, I'll give you 50 lakh rupees. I said, okay. Now, what is happening? I am not allowed to sell this for a period of 10 years. But I'll make an agreement with that person. I will make an agreement with that person telling, see sir, you enjoy the rights of this property. You want to stay over here, you stay. You take the possession of this property. Ownership will be transferred to you after 10 years. So we make an agreement like that. We make one agreement is made like that. So here, what is happening? Who is the owner? I am the owner. Who is the owner of this property? I am the owner, but I have transferred the possession of this property to someone, and following the rules given in the Transfer of Property Act, lawmaker says, Dilip, though you are legally the owner of this property, because you have transferred the property, the possession of this property to someone else, that person will be deemed as okay, not okay. Though actual sale will happen after 10 years, 5 years, 6 years, whatever the period is. Then, if you are giving any property on a long-term lease, now if I take this classroom on a long-term lease for a lease of 12 years or more, then it is said that I am the owner of this classroom. I can do anything with this. Okay, if I take it on a long-term lease. So in case of long-term lease, who is the deemed owner, sir? Lessee, the person to whom the property is given on lease. Extra points. Now, for self-occupied property, you can claim exemption. For up to 2 self-occupied property, you can claim exemption. Who can claim that exemption? Only individuals and HUF can claim exemption. If you're a company having self-occupied property, fully taxable. Only individual and HUF can claim the benefit of exemption for 2 self-occupied property. Municipal taxes paid in foreign countries also allowed as deduction while computing income from house property. So Obama question we did, assuming he paid municipal taxes for one of the property. Now while computing the income for the property, he can claim the deduction. Though it is outside India, we can claim the deduction. Roof is not necessary for non-residential house property. When I say house property, House property means it should be like a house, no sir. Lawmaker says not necessary. Okay, if it is non-residential property, roof is not important. For example, even stadiums and swimming pools, which does not have any roof on that, they will also be treated as residential house properties. They will also be treated as house property. If building consists of different or many flats, each flat will be treated as separate house property. Refund of municipal taxes. Sir, refund of municipal taxes, will it be taxable under income from house property? Lawmaker says no, it will be taxable under other sources. If house property is acquired by a person by paying an amount in installment. So I am purchasing a house on installment. So when I am paying EMI will have interest also. Correct? No? Lawmaker says then interest paid by the buyer to seller for each and every installment would be allowed as deduction under section 24. Yes, Nuri.
For example, I pay a tax of 15,000. I get a refund of 10,000.
Whatever is refunded to you. Why will you tax it under house property? House property, what you do is while computing income from house property, gross annual value, you subtract municipal taxes. You paid 15,000 rupees. You are supposed to pay only 10,000 rupees. You paid 15,000 rupees. You have paid extra 5,000 rupees. Now government is giving back this money to you. That amount which is given back to you, that will be taxable under other sources. 15,000 already reduced. Refund will not get immediately. Government will take time. Whenever you receive it, that time it will be taxable under income from other sources. 15,000. Yeah. Because you are taxing it again later when you receive it. If an assessee lets out a house property to his employee, if I am giving a house on rent to employee, where such letting out supports the smooth flow of his business, then such letting out shall deem to be incidental to business and it will be taxed under PGBP. Now please note, I have Priya Sarees. Now I have one of my employee. Let us say Bhagya is employee of Priya Sarees. She is the best employee of Priya Sarees. Okay, she is the best employee of Priya Sarees. Bhagya stays around 20 kilometers away from Priya Sarees. She stays 20 kilometers away. Now, therefore, because she stays 20 kilometers away, normally the opening time of Priya Sarees is 8 o'clock in the morning and till 10 o'clock we operate from 8 o'clock to 10 o'clock. So, because she stays 20 kilometers away, every day she comes late by 2 hours. Every day she comes by 10 a.m. and every day she goes early by 2 hours. She goes by 8 p.m. Now, please note, why is she doing that, sir? Because she stays at a very far place. So, the vehicle, the bus or the vehicle will not be available, etc. Or that area is such kind wherein you have to go early. After 10 you cannot go, or after 9 you cannot go. So, therefore, what she does, sir? She comes late by 2 hours and goes early by 2 hours. Now, she is my best employee. Now, because she is coming late and going early, my sales are less because of that reason. I know that if she is there for these 4 hours, I would have made 2-3 lakh rupees more on daily basis. On daily basis, I will earn 2 lakh to 3 lakh rupees more if she is there for this period. Okay. So what I tell her is, Bhagya, you do one thing. Why are you staying so far away? You are staying so far away. No, better you stay over here only. She said, no, sir, here the rent is very high, etc. Sir, there, the place where I am staying, I am paying only 10,000 rupees rent. Oh, I said, okay. I said, okay, you do one thing. I have a house right next to Priya Sarees. Okay, I have a house right next to Priya Sarees. I told her, you take this house on rent. You pay me 10,000 rupees only. Normally, if I give this house to someone, I will get 20,000 rupees rent, but no problem. You stay in this house, you pay me only 10,000 rupees, which will be same as whatever you are paying over there, and you will also save your transportation expenses, etc. She said, okay, sir, that is fine. Now, I am giving this house on rent to Bhagya. For what purpose? So that my business is run smoothly. My business is going to run smoothly. I am giving this house. Hey, I am giving this house on rent to her so that I can take the benefit of labor productivity. So in that case, sir, lawmaker says because you have rented this house to a person so that your business should run smoothly or your business should increase, whatever rent she is paying me, that will be taxable under whatever rent is paid by me, paid by her to me, it will be taxable under PGBP and not under salary. Sorry, not under income from. Normally, this rent would have been taxed under income from, but because I have rented this property to her, my business is increasing. Lawmaker says, therefore, this whatever rent she is paying will be taxed under PGB.
Treat this rent place as SOP under business, correct?
No, let out why is it SOP? It is let out property, right? SOP means Priya Saris. This building which is there, this belongs to me only. This is SOP for business.
So like only for the business purpose only I'm giving.
It does not matter. I have rented, sir.
You have rent.
I have rented. I am receiving rent. Yeah. So it is a let out property. It is a let out property only. Business carried on by a firm should be regarded as carried on by all partners. Business carried on by a firm should be regarded as carried on by all the partners. The annual letting out of the property belonging to the assessee which is in occupation of the firm in which assessee was a partner is not included in the income of that partner. Please note. Let us say there is a partnership firm having 3 partners ABC. Now, partner A has a house property. He has a house property which he has, and the firm is called as ABC Consultants. Okay. Partner A has a house property which he has rented to whom, sir? Firm. Meaning he has rented in the sense he is using that for their business purpose. Lawmaker says, though the property belongs to only one partner, because it is used by that particular partner's business, it will be treated as SOP for business purpose. It should be treated as SOP for business purpose. Why, sir? Sir, but only one partner. No, sir. Partnership firm is not the owner. Yeah, partnership firm is not the owner. One partner. What do you mean by partner? Part owner of the business. So when you are part owner of the business, that means you are owner of the business. If you are a person who is using an property for your own business, it is anyways self-occupied for business purpose. Therefore, you exclude it. So in similar way, you should exclude this property also. Okay, not okay. That is all about this chapter. Anyone has any question, you can ask me. Income from house property is done. Income from house property is done. I didn't get you. No, I'll share the material. Last point you want me to repeat. Sir, there is a house property which you are using it for your business purpose. What will I do? Wait, doubt will take time. There is a house property which you are using for your business purpose. What will you do? Self-occupied for business, ignore. Now you 3 are partners. You have started a partnership firm. Now the house property which you had, that you are using for your business purpose, which is a firm, you should treat it as self-occupied for business purpose and ignore. Even though only one owner is there, others are not the owner of your house, but still it will be self-occupied for business. Is it done? Online students, anyone has any question? What is your question? Directly ask me, sir.
Sir, in an illustration, I think the actual rent is higher than the expected. We will take the expected rent. In here we have properties fee. So we do have PQR as core property. For every property, they have computed price. Actual plus vacancy is higher, so they have taken the actual. For the yes property, they have reduced the vacancy.
Yeah. because actual plus vacancy, they would added the complete amount. You should just take the actual rent, not the vacancy period rent.
The actual rent is 125, but they have reduced 16 from the
What is actual plus vacancy?
actual plus vacancy is.
Yes, Sundri, I'll just check. We'll see at the end of the class. Harshita. Or I'll solve now only and then I'll give a break better.
So sorry, so
Actual rent is 96. Page number 1.
151. Actual plus vacancy is 125.
Harshita, tell me the page number, Sundri, of your question. Yes, sir. This question.
Yes, sir. No, sir.
No, sir. Five, sir.
Then I'm using old material or new material. Which material?
Old.
I downloaded it from online. So how do I get the latest material? This first option only. Second link. Executive. Not the tax loss. I should go to paper 4, right? Tax loss.
Yes, sir.
This is, I think, old syllabus where you had.
Sir, this whole syllabus.
What is syllabus?
2017, sir.
22, sir.
So our syllabus is
22 syllabus.
Third link, sir.
2022 syllabus.
Now, first option I should select. I should select study material.
Yes, sir.
Yes, sir.
That I should have
Executive.
paper.
Paper number 7.
Yes, sir.
So in this book, it should be page number 151.
51.
Page number.
Yes, sir. Yes, sir.
So you are telling question number 8, we will solve, Sundri.
So like a small request. Students are parked their vehicles in Punjab National parking area. So they have requested to remove.
Those who have parked their vehicles in Punjab National Bank, please remove your vehicles.
Or else they will be towed.
Or else they will be towing now. Even your institute vehicle is there only. Hey, those who have kept their vehicle over there, please remove it. Page number 151. What has happened, sir? Now you are telling only in this one case there is a problem, all other cases they have done properly. This is my expected rent. If annual rent is more than expected rent, then annual rent, otherwise expected rent. What is this? Step number 2. What is this amount?
This is the annual rent, the top one.
The actual rent.
The actual.
No. Go based on you are doing in life. This is not the actual rent. This is the total year's rent. $96. No, what has happened? I'll tell you. No, I'll tell you. No, I'll tell you what has happened. Here it is 96. They were supposed to write 125 over here. This you are asking.
Correct, sir.
Now you should understand that that okay, if they are writing a wrong figure over here, that means wrongly taken. Question number 8.
Equally wrong.
And please note, there are two methods of doing. I'll tell you one more thing. Either you take what, sir? Actual plus vacancy rent, or you do expected minus vacancy. Compare that with actual. Now, some institute use this material, some institute use this material. Actual plus vacancy is the right method, because expected rent by default will be for full year. So, question number Sundri, what is your question? Question number 8. Harshita, 154. One question they have asked. Illustration number 8. Mr. R owns a house in the municipal value. Those who have their vehicle, please take your vehicle. Okay. Mr. R owns the house. The municipal value of the house is 50,000. He paid 8,000 rupees as local taxes during the year. He uses this house for what is this? Residential purpose, but lets out half of the house for what is it? Partly no. What is the problem? Municipal value is there, municipal taxes. Local taxes is nothing but municipal taxes. He uses the residential house. Half of the house is rented for a rent of 3,000 rupees. Gross annual value is your municipal value. Municipal value they have. What is this? Who sets your institute material? Do you have any idea? Ask him what he drinks and no, how he got 72,000. Is it linked to previous question, Sundri, by any chance? Mr. R owns a house. Municipal value of house is 50,000. And what is this? 8,000 rupees as the municipal taxes. He uses the house for his residential, but lets out half. So one house is there. 50% is let out. 50% is self-occupied. This let out is let out for a 3,000 into 12. 12 threes are 36,000 rupees. Okay. Now what they have done? They have taken double directly. Local taxes 8,000. Net annual value 64,000. Okay. Half regarded as self-occupied property. Net annual value. Now problem is you solve the way you have learned. Don't solve the way they are solving. Now please see. How have we learned it, sir? Self-occupied property, let out property. For self-occupied property, I will take GAV as 0 and local taxes also 0. Net annual value 0. Taxes they have not given. This is 0. Correct? No. For let out property, by anyways I will take only. I will take how much, sir? How much? 25,000 or 36,000, whichever is higher will be my gross annual value. Hello. 36,000 only, right? 25,000 is municipal value, which is expected rent. Compare that with actual rent of 36,000. Take whichever is higher. What is higher? 36,000 less local taxes. Will I take 8,000 rupees as tax? 8,000 is for entire house. 8,000 is for entire house. I'll take only half. 4,000 rupees. My net annual value will be. I don't have any interest. I have this thing. No. Before municipal tax, that 30% standard deduction. What is the standard deduction for this?
9,600.
32,000 into how much, sir? 9,600. Interest is not there. So your final answer should be 22,400. This is the answer, Sundri. 22,400. 22,400. How they arrive at 72,000? I hope you have understood that point. By the way, in their question, they have asking only net annual value. So my net annual, in the question they have asked only net annual value. Can I say net annual value 32,000 is correct? You okay? There is one question which is a good question. I'll just tell you, you solve it. Material only is mistake. There is one question which is very good. This question is good, okay? Now here what has happened is, I'll just read the question, okay? You solve it. I mean, good amount of questions are there. Illustration number 17. Mr. Lal is a owner of a house property. Municipal value is 80,000 rupees. It has been let out for 1,20,000 rupees. The local taxes payable by the owner is 16,000, but as per agreement between tenant and landlord, the tenant has paid the amount directly to municipality. So can I subtract 16,000 rupees? No, because it is paid by tenant. The landlord, however, bears the following expenses. The landlord bears the following expenses. Meaning what, sir? These are the expenses which is incurred by landlord. Extension of water correction, water charges, lift maintenance, salary to gardener, lightning of stairs, and maintenance of pool. So this is the expenses which is borne by me. Okay, 80,000 is my municipal value, 1,20,000. So municipal value is 80,000. Can I say we don't have any other information, therefore municipal value only will be expected rent? Now my actual rent is how much? 1,20,000. So I'll take whichever is higher. 1,20,000 is whichever is higher. Now, whatever expenses I am incurring, my rent is decreasing by such amount. No,
Yes.
my rent is decreasing by such amount. So these expenses are required to be subtracted. The landlord claims the following deduction. Now, what deduction is claiming, I don't care. Right, sir? 30% standard deduction we are going to get. Please note these expenses for tenants. These expenses are for tenants' amenities, meaning it is part of my rent. Now, because it is part of rent, I am subtracting it from rent. Hello. These are part of rent. Because it is part of rent, I am subtracting it from rent. So my actual rent will be 1,20,000 minus this amount. So when you see over here, no. See, there are two things. One, there is an expenses which is incurred by me. There is an expenses which is required to be incurred by you. I am the owner, you are the tenant. If there is an expenses which is required to be incurred by me means owner, I should not subtract. Directly take 30% deduction. But if there is an expenses which is required to be incurred by you, but if I am incurring, my rent is decreasing by such extent. Bube, I am selling sari to you. I tell you I will give you free delivery. So the transportation charges is borne by whom? Me only. I give the sari to you. I say I don't care. You take the sari. I am not going to deliver the sari. You said, sir, I am new to this place. I don't know how to deliver, where to deliver. Sir, you pay the money, I'll repay. I sold the sari to you worth rupees 10,000. You told, sir, you pay the money, sir. You please arrange for transportation. I'll repay that money. Okay. I incurred an expenses of 10,000 rupees for transportation. Now, once the goods reached your house, I asked for the payment. 1,000 rupees. You said, who are you? You took the delivery of the sari and you said, who are you? This is my area. Come here. Tap. So now, can I say for me, my sari sale price is only? There is an expenses which was required to be incurred by you. I have incurred. So my rent is reduced by such extent. So I am subtracting. But if there is any expenses which is required to be incurred by me only, then that is standard deduction anyways I am getting. So when you are seeing over here, you are subtracting these things. Okay, yeah? Yeah, okay, not okay? Let us meet after a short break of whatever time you want. 10:25. Now, please, you can solve the questions from this topic. Solve panno, maja panno. Online students will meet at 10:25.
They can be before.
ಈ ಪಾಂಡ್ಯ Yes. Okay.
First, first is your saving. pastel pink color. பத்து நிமிஷம் தௌசண்ட் இறங்கினா 5 நிமிஷம் காலையில பேசுறேன் 6 months.
நாங்களாம் வீட்ல இருந்து வர பிரச்சனை இல்லை வரமா இல்லையா எங்க அம்மா தெரியும் நீ ஆத்துல இருக்க
நீ ஹாஸ்டல்ல இருக்க உங்க அம்மா நீ போனது தெரியுமா நீ லீவ் போட்டது தெரியுமா தெரியாது இனிமே சொல்லுவ ஆனா லீவ் போட்டு கிளாஸ் சொல்லுவேன் நான் கிளாஸே கவனிக்கிறேன்னு சொல்லுவேன் இரிட்டேட் பண்ணாத என்ன நீ பேசுற ரெக்கார்டிங் இருக்கு நீ அழுகல இருக்கு சின்ன காட்டுறேன் ஒரே நிமிஷம் சாரி கால் என்ன பண்ண கால் பண்ணி எனக்கு எல்லாருக்கும் கால் ரெக்கார்டிங் ஆட்டோமேட்டிக்கா அந்த எப்பவுமே அவ்வளவுதான் சரி ஆனா அனுப்புறேன் கேளு கேட்டு பேசு பாய் நான் போய் ரெக்கார்டிங் தரேன் பாய் தர்ஷினி
எங்க கேட்காங்க
படிக்கிறேன் என்ன படிக்கிறேன்
நான் படிக்கவே இல்லை.
அதுக்குள்ள another part. அதுக்குள்ள யாரு எங்க போயிட்டு அதுக்குள்ள யாரு காட்டுன கேளு. ஏன் dress மாத்திட்டாங்கல்ல? red color dress ஆ போட்டுருங்க மரட்டி.
எங்க போற? எங்க போற?
ஊர் சுத்த போறேன். சரி எதுக்கு அப்ப டிஷர்ட் மாத்தின? வேற யார்கிட்டயும் வீடியோ கால் பண்ணு. சரி ஸ்கிரீன் ஷேர் பண்ணு. ஸ்கிரீன் ஷேர் பண்ணு. ஸ்கிரீன் ஷேர் பண்ண அதுக்குள்ள போய் டெலிட் பண்ண கால் சரி புதுல ஸ்நாக் போறாங்க கவனி புதுல லெசன் எடுக்க போறேன். ஸ்பீக்கர்ல இருக்க லூசி
It is proper fake.
Welcome back, sons. Welcome back. Online students, I hope I'm audible and also the screen is visible. Online students, I hope I'm audible and also the screen is visible. Let us start the next topic. Nice chapter, important chapter from exam point of view. One question compulsory will come from this topic. Income from. One question will come for sure from this chapter. 5 marks. Your institute will ask not more than 5 marks. 5 marks, 5 marks, 5 marks. Income from capital gain.
Gave you something.
The class is going good. Plus one is what?
See, +1, be like till
Heart and suitcases.
मजा है इससे. Like Google, you should attend. You should attend class regular. I only did that in class. Mercury, you don't attend. What to do? Income from capital gain. Income from capital gain. Income from capital gain. Now in past tense. Hey, my speed is fine, huh? Fast it is.
So 30 cents.
sir will ask.
No, when I teach, Google.
Teach is I think only much nice. Say the chapter.
No idea. Numbering you do in life. Income from Sri Lakshmi. Sri Lakshmi. Income from capital gain. Income from what, sir? Cap gain. In your past tense, one of the most important chapter in your entire income tax law. One of the most important chapter. The name of the chapter is what, sir? Income from capital gain. Google you should not. Income from capital gains. Sri Lakshmi, income from? Yes. Income from capital gain. Now please note. I have a house. From this house, I can get two types of income. I give this house on rent. I will get rental income. That rental income will be taxable under the head income from. I can give the house on rent, or I can do what? I can sell this house. If I sell this house, I will get capital gain. Okay, not okay. If I sell this house, I will get what, sir? Capital gain. A is this. Sir, same thing you thought last chapter also. Yeah, every chapter also it is the same thing. Now please see. What is this chapter telling? Very easy chapter, very important chapter. This chapter says, if you have a capital asset, this chapter says, if you have a capital asset and if you transfer that capital asset, if you have a capital asset and if you transfer. Online friends, joke. Internet is correct. I was pranking with you guys. Online students. Now they'll check internet connection. What is it? Correct now. Online students. By the way, how many of you checked online students? How many of you checked internet connection? See, I have got three people already sent message without me asking.
Get hurt, he's safe.
Oh. How do you know I get hurt? Income from capital gain. Income from Shira. Income from capital gain. What is the provision telling, sir? If you have a capital asset and if you transfer that capital asset, upon transferring that capital asset, if you get any gain, if you have a capital asset, if you transfer that capital asset, upon transfer of that capital asset, if you get any gain, that gain is taxable under this chapter. Which chapter, sir? Income from capital gain. Only two conditions. If you have a capital asset and if you transfer that capital asset, whatever gain you get, that gain will be taxable under income from capital. You okay, not okay? Section 45 to section 55, these are the different sections which you are going to learn in this chapter. Section 45 to section 55. Shall we start? Section 45. Charging section. Section 45 subsection 1 is the charging section of this chapter. Section 45 subsection 1 is what, sir? The charging section. What is the charging section telling? It says any profit or gain, any profit or gain arising from transfer of capital asset. Any profit or gain arising from transfer of capital asset. Any profit or gain arising from transfer of capital asset shall be taxable under the head any profit or gain arising from transfer of capital asset shall be taxable under the head income from capital gain in the year in which transfer took place. Any profit or gain arising from transfer of a capital asset shall be taxable under the head income from capital gain in the year in which transfer took place. Any profit or gain arising from transfer of a capital asset shall be taxable under the head income from capital gain in the year in which transfer. Any profit or gain arising from transfer of a capital asset shall be taxable under the head income from capital gain in the year in which transfer. Any profit or gain arising from transfer of capital asset shall be taxable under the head income from capital gain in the year in which transfer took place. Any profit or gain arising from transfer of a capital asset shall be taxable under the head income from capital gain in the year in which transfer took place. Let us say I have a capital asset. How is it? Capital asset. I purchased this capital asset in the previous year 2001-2. In which year I purchased? In the year 2001-2 I purchased this house, and I purchased this house for, let us say, 10 lakh rupees. I purchased this house for how much, sir? 10 lakh rupees. Now I sold this house. I sold this house in the previous year 24, 25. I sold this house in the year 24, 25. For how much, sir?
10.
10 lakh. I sold this house for how much, sir? 75 lakh rupees. I sold it to whom? I sold it to Kamesh. I sold it to whom, sir? Kamu. I sold this house to whom, sir? Kamesh. Now, Kamesh, I sold this house to Kamesh. Kamesh came to me. Kamesh told me, sir, oh, sir. Sir. Oh, sir, I want to purchase your house. I said, definitely, Kamesh. Anything for you. Kamesh came to me. Kamesh told me, sir. Oh, sir, I want to purchase your house. I said, definitely, Kamesh. Anything for you. I'm ready to sell this house. He asked me, sir, for how much will you sell? I told, I'll sell it for 75 lakhs. Sir, 75 lakhs. Sir. I said, yes. Sir. Oh, sir. Right now, I am just a CS executive student, no, sir. He told me, sir, I am just a CS executive student right now. I said, yes, I know. Sir, but I want to purchase your house. I said, yes, no problem. You can purchase my house. Sir, right now I am just an executive student. I said, yes, I know. Sir, I will write my final examination after 2 years. I'll write my final examination after 2 years. I said, okay, yes. So, sir, after writing my final examination in 2.5 years, once the result is coming, I will become a company secretary, sir. I said, okay. Sir, at that time, I will start earning, sir. I said, okay. Sir, you sell the house to me now, sir. I'll pay you the money after 3 years. Is it fine, sir?
Yes.
He told, sir, I will purchase the house from you today only. But I'll make the payment to you after 3 years. 3 years means? 3 years means what? What is this?
28.
20.
29.
28.
After 28.
27, 28. Third year.
Okay.
27, 20. I will make the payment to you in the year 27, 28. I said, no problem, Kamesh. I said, no problem. Majapan. Now my question is, in which year should I pay the taxes? Think and answer. Sir, you are going in 2x speed, Ante. 2x speed I am talking.
The gain is in 27, 28. So taxable on 27, 28. The gain arises, they are paying it to explain.
But live it is.
Back.
Oh wow, how gooby that person will be. You go back 10 seconds, then to it. 10 seconds. Sarkuri only or gooby. Huh? Yeah, but when you're supporting, you should give good support, no gooby. Logical support you should give.
Yesterday when you saw what is meaning for Google in Kannada. Sir, it's Kannada only.
No, gooby is Russian word. Like we have rupees, they have rubles.
Rubles.
Correct. So they have rubles. Hey, tell me the answer for this. When will I pay the taxes?
24, 25.
27, 28 or 24, 25?
27, 28.
24, 25 or 27, 28? You know problem. 24, 25 or 27, 28?
27.
How many of you say 24, 24? How many of you say 27, 28? Now, inge pa. Section 45. Oh, Raja Lakshmi. Rajashri only I told. Raja Lakshmi. I told both those people. Okay, both those people. Okay. Now, inge pa. Section 45, subsection 1 says, any profit or gain arising from transfer of a capital asset shall be taxable under the head income from capital gain. Niraj, in the year in which transfer took place. In the year in which? In the year in which? Which year transfer took place? If payment is giving after 3 years, house is taking now only. So transfer took place in 24, 25. So tax also you should pay. Yeah, I understand. Sir, but
Sir, Bharata caste is
that's what. Feeling should not come in between. Correct. You're understanding? Feeling should not come in between. Okay? Barada task pass. Not it says. That is your head. That is your headache. Why didn't you take money? Lawmakers are very clear. Feelings should not come in between. Hey, I told you first day only I told you. Income tax law, tax, whatever tax law it is, feelings should never come in between. Okay, feelings, lot of times it will happen that, oh my God, sir, how come? This is the law. Why are you taking after 3 years? Because I like calmness. No, now please see. Come on. Come on. Wow. Kamu, you have a daughter? Hey, Nan. The way you're sitting next to him, no. I feel that you are only his daughter.
No, we can't see him.
Yeah, I know. But what you can see, I know.
I can.
Come this side. Hey, no, you come this side, sir. Section 45, subsection 1 says something. Any profit or gain from transfer of a capital asset. So can I say the meaning of transfer is very important? What do you mean by transfer? And transfer of what? Capital asset. So unless until there is a transfer of capital assets, there is no capital gain. There should be transfer of a capital asset. There should be transfer of a capital asset. So what do you mean by capital assets? We'll understand. Let us see the meaning of the word. Section 2, clause 14. Capital asset. Capital asset means what, sir? Capital asset means property of capital asset means property of any kind held by the achachi. Property of any kind held by the achachi, whether connected to business or not. Property of any kind held by the assessee, whether connected to business or not. Hey, what is the capital asset? Property of any kind held by the assessee, whether connected to business or not. Capital asset means property of any kind held by the assessee, whether connected to business or property of any kind held by the assessee, whether connected to business. Hey, what is it telling? Property of any kind. Property of any type of property held by the assessee. Whether it is related to his business or not related to his business, I don't care. Any type of property held by the assessee, whether it is related to his business or not, it will be treated as capital asset. Hey, tell me, is car a property of any kind held by the assessee, whether connected to business or not? Car. Is this TV which you are seeing, is this TV property of any kind held by the assessee, whether connected to business or not? Hey, what about the AC which we have in the classroom? Is it property of any kind held by the assessee, whether connected to business or not? Hey, what about my water bottle? Is it also property of any kind held by the assessee, whether connected to business or not? Hey, what about this calculator?
Any kind of.
No, any kind of property of any kind of. No, any kind. Property of any kind. Hey, this calculator is also property of any kind held by the assessee, whether connected to business or not. Yeah, I'm a very good painter. I have done a Mona Lisa painting. Okay. Now, is this property? You're not able to see. Is What you are thinking, I don't. Hey, Goobes are Goobes. Oh, she is Goobe drawing on hand. See her. See. Property of any kind held by the associate. Whether you please control your emotions. Father-in-law is sitting here only. In front of father-in-law, you are talking all these things. Sorry, father-in-law. Father-in-law, really listen. Is this Mona Lisa you see? Is this also property? Continue. This is also property of any kind held by the associate. My sleeping only this I want. I have to make. Yeah. Now, property of any kind held by the associate, whether connected to the business or not. During break time, you go and sit on sofa. Is that also property of any kind held by the associate, whether connected to the business or not? Hey, what about the T-shirt which I am wearing? Is it also property of any kind held by the associate, whether connected to the business or not? Hey, what about? I am a sari dealer. What about the saris? Is it also property of any kind held by the associate, whether connected to the business or not? What about jewelry? Is it also property of any kind held by the associate, whether connected to business or not? Then I have shares. Shares. That is also property of any kind held by the associate, whether connected to business or not. Hey, what about my color? Specs. Is it also property of any kind held by the associate, whether connected to? That means everything is capital asset. Hello. A lawmakers are telling capital asset means come as property of any kind held by the associate, whether connected to business. That means everything is capital asset only, no sir. So whatever you sell in your life, you will get capital. Hello. Propagate. Whatever you sell in your life, will you get capital? Because lawmaker says if you transfer a capital asset, you will get capital gain. Correct? No. That means everything. Capital asset definition says capital asset means property of any kind held by the associate, whether connected to business or not. So everything is property of any kind held by the associate. That means, sir, if I am a person who is a dealer of sari, for me, business income will not come up. For me, capital income will come up. No. So normally lawmaker says capital asset means property of any kind held by the associate, whether connected to the business or not. However, it has some exclusions, but it shall exclude. What shall be excluded from this, sir? What shall be excluded? Stock in trade. Stock in trade is not property of any kind. Stock in trade. See, normally capital asset is property of any kind held by the associate, whether connected to the business or not. But stock in trade will not be taken as capital asset. Stock in trade will not be taken as capital asset. Why, sir, stock in trade? Because you are a person who is going to deal in that property or the stock in trade on daily basis. So because you are dealing in that property, I want to treat it as business. So stock in trade specifically is not a capital asset. Stock in trade is specifically not a capital asset. Now, if I am a jewelry dealer and if I sell jewelry, my income will be business income or capital income? Why business income you are telling?
Because it's stock in trade.
Because, sir, jewelry dealer, jewelry will be stock in trade. Correct? So for me, the income will be business income. Then lawmaker says next thing which is not a capital asset is movable personal effects. What's, sir? Movable personal effects. Sir, what do you mean by movable personal effects? Movable personal effects means movable property which you are using for your personal purpose. A movable personal effects means movable property which you are using for your personal purpose. Movable property which you are using for your personal purpose. This calculator, movable property, am I using it for my personal purpose? Not a capital asset. It is not a capital asset. Is correct or not? Movable property, I am using for my personal purpose, therefore it is not a capital asset. It is movable property, I am using it for my personal purpose, correct? It is not a capital asset. Hey, okay, not okay. Lift pakka hai. But fire. For your maja, you want me to do everything in life. Go away. Sir, you come home today, sir. Maja will be there. A. Movable personal effects. What is it?
Move your back.
Move your back, I thought. A. Par go away. Movable personal effects are not. A capital asset means property of any kind held by the SSC, whether connected to business or not, but it shall not include movable personal effects. Now, please note, movable personal effects means what, sir? This calculator is not a stock entity. What about my specs? Not a capital asset. Correct, not correct. What about this car?
If it is for personal purpose.
Movable personal effect. Okay, I'm using it for my personal purpose, daily travel, etc. What about TV? You done this TV. TV, is it a capital asset? Yeah, personal purpose only. After you all go, no, I watch must movies I watch in this class. Now tell me, is it a capital asset or not? Are you understanding something? Stock in trade is not a capital asset. Movable personal effects. Movable personal effects means what, sir? Those things which are movable in nature and which are used by me for my personal purpose. Okay? Any person, movable personal effects, anything which is movable, which is used for your personal purpose. It does not matter who is using it. Okay? However, here there are some exceptions. Except what, sir? Except, yes, I want. Except what, sir? Except a movable personal effects, are they capital asset? Movable personal effects, are they capital asset? No. Except means whatever I am going to write now, though they are movable, they will be treated as capital asset. Except DJ, Paso, BV. Except what, sir? DJ, Paso, BV. Except what, sir? DJ, Paso, BV. Meaning DJ, Paso, BV. A DJ, Paso is wife, BV means wife. A DJ, Paso, BV. DJ, Paso, BV is movable. We'll see. They are all movable things which you are using for your personal purpose, but still it will be treated as capital asset. They will be treated as capital asset. Sir, what is covered under DJ Paso BV, sir? DJ Paso BV means D for drawings, J for jewelry, P for paintings, A for archaeological collections. Then S for sculptures. Yeah. See, who people are there in my class? You are good with it. Yeah. Sculptures. Then S for shares and secretaries. Then O for any other work of art. B for bullion and V for virtual digital.
Before bullion.
Now please note, movable personal effects except DJ Paso BV. Meaning DJ Paso BV, though they are movable, they will be treated as capital asset. Normally capital asset is property of any kind held by the SSC, whether connected to business or not, and it shall not include stock in trade, and it shall not include movable personal effects. What is movable personal effects? Movable personal effects means the movable property which you are using for your personal purpose, they will not be treated as your capital asset. Except DJ Paso BV, meaning DJ Paso BV, though it is movable property,
They are considered to be
though you are using it for personal purpose, it will not be treated. It will be treated as what's a DJ Paso BV? DJ Paso BV means drawings, jewelry, painting, archaeological collections, sculptures, shares and secretaries, other work of art, bullion and virtual digital assets. Hey, DJ Paso BV, capital asset or not? DJ Paso BV. Hey, what is DJ Paso BV? D for J for P for A for S for S for O for B for V for DJ Paso BV is capital. DJ Paso BV is capital. Though you use it for your personal purpose and though they are they will be written as. So now tell me over here, what is not a capital asset? Tell me, what about this car? Is it a capital asset?
It's a
Mobile property which I am using for personal purpose. Is it a capital asset? What about this AC? Water bottle? Calculator? Painting? Mona Lisa? What is this? Sofa? My t-shirt? What is this? Kamir sari? What about this jewelry? Shares?
Yes.
Specs?
No.
Okay. Movable
I mean,
personal effects. Movable personal effects. Except DJ Paso BV. Except DJ Paso BV. A D for drawings. They are telling drawings and paintings. What is the difference?
drawings are sketch paints. Drawing is paints. So drawing includes blueprints.
So you say the car which I have done is drawing. And this Mona Lisa which I have done is painting. Gube. Why? What is not there in my Mona Lisa? A drawing means what, sir? This is drawing. Something which you sketch work, etc. by use of pencil. Hey. Hey, problem. Hey. Kurisiala. Eyewear, sorry. Eyewear. What is your problem? Eyewear. That is my combination. Not nice. What shall I do?
Saving cream.
Hey, this is very white now. Oh, in your, I mean, on the screen it is looking completely different color only. For me it is. Hey, why is it looking so bad? Anyways, for me it is looking skin color. No problem. Hey, eyes only went up. Yeah, Gube Multani Mitti Tarkuris. Difference you understood drawing and painting. This is painting. Bube, I am telling. This is painting. This is paint. I have painted this. Okay, brush I have used. That is okay. Yeah. Drawing is also drawing is a capital and painting is also a capital asset. You okay, not okay? Next, they are telling jewelry. Jewelry means what? Jewelry, gold jewelry, silver jewelry, diamond jewelry, etc. etc. Now, jewelry means jewelry basically, whatever. So, jewelry is a capital asset. Jewelry is a capital asset. So, jewelry of gold. Tell me now, I don't have jewelry, but I have gold. Capital asset. Correct? Is it a capital asset? Now, what about, let us say in my house, no, I have silver plates. I have silver plates. In my house, I have golden utensils. Silver utensils are also there with me. Gold utensils are also there with me. Utensils, gold utensils, silver utensils. Right. Gold utensils, silver utensils I have in my house. Now what will happen? Is it a capital asset?
Yes, sir.
Think an answer. Is it jewelry?
But
Why not jewelry? Jewelry means anything made of gold and jewelry, whatever that. You should wear. You cannot wear kadai on your head and go up. You wear those spoons and go Sundari. Just imagine, nice she look now. Those spoons. Huh? So they are other work of art. So anyways, Supreme Court judgment came. Supreme Court judgment says silver utensils. Please note, utensils are movable personal effects which I am using for my personal purpose. I eat food in that. Correct? Utensils. It is not some jewelry item which I am wearing, etc. Utensils is something which I am using for my cooking purpose, for my eating purpose, etc. Supreme Court judgment came. And Supreme Court told silver utensils are not treated as capital asset. Silver utensils are not treated as capital asset, whereas gold utensils will be treated as, because normally in Indian houses it is very common to find silver utensils but not gold utensils. Correct? Therefore, gold utensils will be treated as capital asset and silver utensils will not be treated as capital asset. Okay, not okay. Now, yesterday, what about in Dubai? No, if you see in Dubai, you have a person. What if I have gold shirt?
Yes, actually, ornament.
What if you have this fellow? See, this fellow. This shirt is made of gold. Tell me what is this? This shirt which is wearing. Is it capital asset? Shirt made of gold. Huh? Is it capital asset? Is it a capital asset? What about my t-shirt? This silver embroidery we have given. What do you think? The logo, it is made of normal paint. It is a full silver we have imprinted all silver over here. Is it a capital asset?
No.
What? Are a dream concentrate. What if this was actual silver? Lawmaker says yes, it is a capital asset. Lawmaker says yes, it is a capital asset.
Silver.
Normally, ladies are there. In their wedding, no, they'll fight with their father and tell, I want silver lehenga for my marriage. That silver lehenga which is there, is it a capital asset? That silver lehenga which is there, is it a capital asset? Is it a capital asset? Lawmaker says yes, it is a capital. Normal lehenga which you are wearing, normal t-shirt is not a capital asset, but this shirt, if this t-shirt has these buttons which you see, they are all black diamonds.
Then
Then it is what size?
Capital.
Because if it is made of silver, the value automatically will increase of this product. Correct? Not correct? So lawmaker says yes, it is a capital asset. Now once I went to Dubai. Okay. In Dubai, I saw what, sir?
Gold.
In Dubai, when I went over there, no.
So usually you did a
Yeah. So inge pa. Now my question is, genuinely it is there. In Dubai and all, it is there. It is very common over there. Yeah, very common. Yeah. So my question is whether this is capital asset.
Yes.
Yes, sir.
Yes, sir.
Whether
This should be capital assets. Yes.
what will you do? You lift and wear the toilet in your head and go. Is it a jewelry? Is it a capital asset?
It's not movable.
Is it a capital asset?
This matter.
What is this person doing? Yeah, because it is of gold, no, I is coming from somewhere else. I don't know. I'm just. Fish also gold, huh? Yeah. Kidichi also gold is telling, say, yeah. Is it a capital asset?
Yes.
Is it a capital asset? No photos, only photos they are putting. No, Ajay is there, huh? Hey, tell me, go base. Is it a capital asset?
Yes, sir.
Is it a capital asset? Lawmaker says yes, it is a capital asset. Yesterday, what I did, you know? Yesterday, I went and purchased marigold biscuit. Is it a capital asset? Don't ask this Google questions in life. Marigold, sir, I smoke gold black cigarettes, sir. Not a capital asset. Drawings, jewelry, painting, archaeological collection things. Many people have a habit of collecting some old things in life, correct? No? So, antique pieces are the antique pieces are good. Antique, yeah. Then we have sculptures. Sculptures means sculptures. That is in Jailer movie.
Mahabalipuram. Yes.
In Mahabalipuram you have, correct? No, sculptures. Sculptures are also treated as capital asset. Any other type of art. Okay. Now normally paintings, if it is nowadays, you know NFTs.
Non-fungible.
Now they are also treated as capital. They are also treated as capital. Bullion means
Bar.
gold, biscuit, silver, biscuit, etc. Virtual digital assets, bitcoins, NFTs, all will come under this. Movable personal effects. Yeah, please. Section 2 clause 14. Capital asset. Capital asset means what, sir? Property of any kind held by the assessor, whether connected to business or not, but shall exclude stock in trade, movable personal effects except DJ, Passo, BV. Movable personal effects except DJ, Passo, BV. And one more thing which is not a capital asset is your rural agriculture land. Rural. Sir, what is rural agricultural land? Agricultural land located in rural area. Village ala. What is rural area?
2 kilometers less
An area whose population is less than 10,000 is a rural area. Basically, area which is not an urban area is rural. What is urban area? Area with population of 10,000. Is something like this we have studied long back in our life. Now, apart from that, every now and then government will keep on issuing something called as gold bonds and gold deposit certificates. They are also not rated as capital asset. Why is? Because it is in rural area. So if farmer is selling land, I don't want to tax him. What? Yeah, but they have specifically mentioned it separately. They have specifically mentioned it separately. Share securities, it will come, but it is mentioned separately.
Only for government holdings.
Yes, Kirtivas. Now, if car is personal effect, what if the car is used for by the taxi drivers? They are using car. What will you tell? For them, it is a business asset, no, because it is their business. A capital asset means what's a property of any kind held by the SSA, whether connected with business or not, shall not include stock in trade, gold bond certificates, movable personal effects, and rural agricultural land. Apart from this, what is a capital asset, sir? If you are any securities held by any securities held by foreign institutional investor. Any securities held by whom, sir? Foreign institutional investors. Any securities held by foreign institutional investor. Now, please note. Normally, if you are an investor, for you shares are stock in trade. If you are an investor, because you will be dealing in shares every now and then, for you, I mean, if you are an institutional investor, not a regular investor, if you are an institutional investor, for you the shares and securities will be stock in trade, because you are going to deal in that on regular basis. Correct? No, it is a stock in trade. But specifically they have told, if you are a foreign institutional investor, whatever shares and securities you are holding, we will treat it as capital asset. Specifically they have told that for you guys, we will treat it as capital asset. Why, sir? Because they want investor to invest more, and the tax rate for capital asset is very less when compared to your normal stock in trade. Stock in trade will be taxable either if you are a company, 30% tax rate is there, but this you have to pay only 10%, 12% tax, etc. So any securities held by foreign institutional investors, and if you have unit linked insurance policy which is exempt under section 1010D, unit linked insurance policy, unit linked insurance policy, unit linked insurance policy which is exempt under section 1010D. Unit linked insurance policy exempt under section 1010D. That. So this is capital asset. Now, if you transfer capital asset, then only capital gain will come. If you transfer, the meaning of transfer is given in section 2 clause 47. Section 2 clause 47 gives the meaning of transfer. Section 2 clause 47 gives the meaning of transfer. Section 2 clause 47 says transfer includes means whatever you generally understand by this word transfer is a transfer. Meaning, as per your normal understanding, what is a transfer? Is sale a transfer? Yes. So you have some understanding. Transfer means the property is getting shifted from one person to another person. Correct? So normal, as per your normal understanding, what is a transfer? That is definitely a transfer. Apart from that, it will include ... Transfer shall include what, sir? Point number 1. Sale of a capital asset. Transfer includes what? Sale of capital asset. Transfer includes sale of a capital asset. A sale is what? Sale is actual sale of capital asset. Meaning, in case of sale, what will happen? Ownership is going to be transferred from one person to another person. Correct? No? If I am selling something to you, I am the owner of that item. Now the ownership is getting transferred from me to you. Sale of a capital asset. Transfer includes, please note, in case of sale, ownership will get transferred along with possession. You are selling something for which you receive a consideration in the form of money and otherwise also. Transfer of a capital asset. Transfer includes what, sir? Sale of a capital asset or a transfer of capital asset. Sir, what is transfer, sir? Sorry, exchange of a capital asset. Make it as exchange of capital asset. Exchange means what?
You exchange one for another.
Yeah. So if I give you a gold ring, transfer. I mean, transfer is the heading. Sorry, I wrote it again. Exchange means what, sir? Exchange means I am giving a gold ring and taking, let us say, car from you. In such cases, I am transferring the gold ring to you. So I will have to pay capital gain tax. For you, there may be no tax at all. Why? Because car is not a capital asset. So there will be no capital gain tax. You may have income from other sources. Sale of a capital asset or exchange of a capital asset or sale of a capital asset, exchange of capital asset, relinquishment of capital asset, relinquishment. Or extinguishment. Sale of a capital asset, exchange of a capital asset, relinquishment of capital asset or extinguishment of capital asset. Relinquishment and extinguishment, what is the difference?
Abandoning.
Relinquishment means retaining. No, I'm just repeating what you're telling. Relinquishment means, okay, what is the extinguishment then?
Abandoning.
Relinquishment means what then? Relinquishment means what, sir? Destroy of a capital asset. Extinguishment what, sir? Surrender of a capital asset. Ulta I have written. Extinguishment means it is destroyed. Relinquishment means you have surrendered the right in that particular asset. For example, my father told Dilip, I have 10-acre land. I have 2 sons. Each son I'll give 5 acre. I said, no, I don't want. I am relinquishing the right in the capital asset. I am relinquishing. So my share I am not taking. I am relinquishing the right. So in such cases, lawmaker says even if you are relinquishing, it is a transfer. Extinguishment of capital asset. Tsunami came. Because of tsunami, a building was completely collapsed. Now during floods and all, you would have seen. Now in the flood, there was some houses which got completely destroyed. Lawmaker says that is extinguishment of capital asset. You will have to pay capital gain tax. Sir, house is gone, sir. I don't care. Pay me tax. Yeah, we'll compute also. We'll do the computations. Extinguishment of capital asset and relinquishment of capital asset. Relinquishment means I am surrendering my right to someone. I have a right in the capital asset. I am surrendering that right to someone else. That is relinquishment. Extinguishment means something is destroyed. Now, because it is, for example, someone stole my jewelry. Jewelry is gone. Lawmaker says pay capital gain tax. Jewelry is gone. Floods are there. Because of floods, houses are all destroyed. Lawmaker says house is gone. House is gone. Are you going to get the house again? No, house is gone. Therefore, pay me capital gain tax. Sir, how does it work, sir? How do I pay taxes on all these things, sir? We will study. We will study all those things. Or next point is what, sir? Conversion of capital asset into stock in trade. Next point is what, sir? Conversion of capital asset into stock in trade. Conversion of what? Capital asset into stock in trade. Meaning, let us say, 10 years back I got married. Okay, 10 years back when I got married, my wife got lot of jewelry with her. Lot of gold she got. Okay, at the time of my marriage, my wife got around 50 kgs gold. Okay, 10 years back I got married and my wife got 50 kgs gold. Now, I did lot of different kind of work throughout my lifetime. From last 10 years, before that also I did lot of work. Meaning, I became a chartered accountant. I started CA practice, but it did not work. Therefore, I started teaching. That is also not working. I started study business, not working. Shoe business, not working. Everything I did in my life, nothing was working. So I looked at my wife and I told, the last option which is there right now, the gold, if you see gold rates are too high, I told, can I please start a gold business? He said, okay, Dilip. So this 50 kg gold which was there, that was a capital asset. It was a capital asset for us. Now I am converting it into stock. Hey, please note, I am not selling the jewelry. Have you sold the jewelry? No. Just conversion is happening. A capital asset. Now whatever was there in my locker room, now it is displayed to people for sale. It is just conversion. Have I sold anything? No. Lawmaker says conversion of a capital asset into stock in trade is also a transfer. It is just a conversion. There is no sale at all, but still it is treated as transfer. Are you understanding something? Conversion of capital asset into stock in trade. Sir, how will I pay taxes, sir? I have not received. That and all we'll learn later. But we are understanding the meaning of transfer. Next, compulsory acquisition of capital asset. Compulsory acquisition of capital asset. Now the government is planning to construct an highway, or government is planning to construct, let us say, metro line. Because they want to construct that metro, so my house is coming in between. So lawmaker says, I want to take over your property. So they are compulsorily acquiring my property. I am not ready to sell, but still they are telling, no, you will have to sell because there is law and order issue which is happening because of your property. Now government is compulsorily taking over my property. Lawmaker says it is also a transfer. I am not selling. Is there any intention for me to sell the property? No. Lawmaker says still it is a transfer. You will have to pay capital gain tax. Compulsory acquisition of a capital asset. Then we have, bye Sundari. Sundari, bye. Transfer of possession of immovable property as per Transfer of Property Act. Just some time back I told you, I gave an example. Transfer of possession of an immovable property as per Transfer of Property Act. If you are transferring the possession of a property as per the Transfer of Property Act, now that though there is no ownership getting transferred, though there is just a possession getting transferred, that transaction will be regarded as transfer and you will have to pay capital gain tax. Transfer of, then redemption of zero coupon bonds. Redemption of what, sir? Zero coupon bonds. So there is something called as zero coupon bonds. Okay, there are something called as zero coupon bonds. What are zero coupon bonds? It is those bonds which are issued at a discount and redeemed at par. Zero coupon bonds means what, sir? The bonds which are issued at a discount and redeemed at par. Something which you are issuing at discount and redeeming at par. Let us say I have a zero coupon bond. Now the face value of this bond is, let us say, 1 lakh rupees. The issue price of this bond is 80,000 rupees. Face value of the bond is 1 lakh. Issue price is 80,000. Now this 20, I have issued the bond at a discount of 20,000 rupees. I have issued the bond at 8,000 rupees only. But what is the actual value of the bond? 1 lakh rupees. Now when I am going to redeem it on a future day, I will have to pay 1 lakh rupees. Now because this redemption of zero coupon bonds is treated as transfer. Lawmaker says redemption of zero coupon bonds are treated as what, sir? Transfer. Is it clear? Any problem? Redemption of zero coupon bonds. Have you understood the meaning of transfer? You please note, you don't have to buy at it. You just have to know it. Don't have to buy at it. Meaning of transfer. You will get only practical question from this topic. Capital asset and transfer, is it clear? Any profit or gain from transfer of a capital asset shall be taxable under the head income from capital gain in the year in which transfer took place. Okay. Now, please note. Types of capital asset. Types of capital. Company.
Company asset.
Yeah. Not damaging it, just keeping it aside. Types of capital asset. Types of capital asset. Capital assets are divided into two types. Capital assets are divided into two types. Niraj, capital assets are divided into two types. What are two types of capital assets, sir? Long-term capital asset and short-term capital assets are divided into two types. One is called as long-term capital asset, another one is called as short-term capital asset. Long-term capital asset and short-term capital asset. Now please note, you have two types of capital asset. One is called as long-term capital asset, another one is called as short-term capital. If you transfer long-term capital asset, you will get long-term capital gains, and if you transfer short-term capital asset, you will get your short-term capital gain. Capital assets are divided into two types. One is called as long-term capital asset, another one is called as short-term capital asset. Short-term capital asset, if you transfer, you will get short-term capital gain. Long-term capital asset, if you transfer, you will get long-term capital gain. You transfer a capital asset, you will get capital gain. If you transfer short-term capital asset, you will get short-term capital gain. If you transfer long-term capital asset, you will get long-term capital gain. Sir, wait. How do I know whether it is a long-term capital gain or short-term capital gain? Very simple. You transfer long-term capital asset, it is long-term capital gain. If you transfer short-term capital asset, it is. Yeah, sir, but how do I know whether something is a short-term capital asset or a long-term capital asset?
Period of holding.
Lawmaker says you should see the holding period. You should see what, sir? The holding period, or you should see the period of holding. How will I come to know? How will I come to know whether a capital gain is short-term or long-term? I should see the type of asset. If the asset is a long-term capital asset, it is long-term capital gain. If the asset is short-term capital asset, short-term capital gain. So for checking that, what should I see? period of holding. Holding period or period of holding. What is period of holding? Period of holding is the period from the date when you purchased it. The period from the date of acquisition of the capital asset till the date of transfer of such capital asset. What is period of holding? The period from the date when you have purchased it, the period from the date when you have acquired it, from the date of acquisition till the date of transfer. From what date you purchased till what date you have transferred. Can I say in between whatever period is there, it was a period when you holded the asset. Correct? From the date when I purchased the mouse till the date when I am going to sell the mouse by mistake. By mistake, genuinely by mistake. It's don't complain. They don't tell anything. Okay. Genuinely by mistake. I was being over there and I throw like this and the period from
Date of acquisition to date
the period from the date of acquisition of that capital asset till the date of transfer of the capital asset. I holded this asset now. If I have holded it for a longer period of time, it is long-term capital asset. If I hold it for a shorter period of time, it is short-term capital asset. But sir, what is the time? What is the time? Now make sense, I'll tell you. So to check whether a capital gain is a long-term capital gain or short-term capital gain, you should see period of holding. Period of holding is the period from date of acquisition till the date of transfer. Now the period of holding which is there are three period of holdings. One year, 2 year, 3 year. If you have holded a capital asset for more than 1 year, 2 year, 3 year, it is long term. If you have holded a capital asset for less than 1 year, 2 year, 3 year, it is short. If you have holded a capital asset for more than 1 year, 2 year, 3 year, it is long term. If it is holded for less than 1 year, 2 year, 3 year, it is short term. Sir, how will I come to know whether it is 1 year or 2 year or 3 years? They see, if you see your material, no, instead of 1 year, they say 12 months, 24 months,
36 months.
If you have hold it for more than 1 year, 2 year, 3 year, long term, less than 1 year, 2 year, 3 year, short. Sir, what if it is exactly equal to 1 year, 2 year, 3 year?
It's short term.
Short. So 1 year will be for whom, sir? 1 year period of holding you should see for securities listed in recognized stock exchange of India. Recognized stock exchange. In India. Securities which are listed in recognized stock exchange in India. Securities which are listed in recognized stock exchange of India. So there are two stock exchange in India which are recognized, which is NSE and BSE. So if there are any securities which are listed in recognized stock exchange of India, which is NSE or BSE, then it is 1 year. If you are holding it for more than 1 year, it is a long-term capital gain. Less than 1 year, it is a short-term capital gain. Then we have what, sir? Units of Unit Trust of India. Unit Trust of India or units of Business Trust of India. Units of Unit Trust of India or units of Business Trust of India. Like nowadays we have many institutes like LIC is there, etc. Before, no. I'll write next point, then I'll explain it. Units of equity oriented mutual funds. And lastly, zero coupon bonds. Lastly, what's the zero coupon bonds? For these things, I will see what period of holding. I will see 1 year or 12 months. If you are holding for more than 1 year, it is long term. Less than 1 year, it is short term. Securities listed in recognized stock exchange of India, units of unit trust of India, units of equity oriented mutual fund, and units of zero coupon bonds. Now, what is this equity oriented mutual fund? Mutual funds, there are different types of mutual fund. Equity oriented is where the money which you pay will be invested by the mutual fund company in the stock market. Debt oriented mutual fund, the money which you pay, they'll purchase debts, bonds they'll purchase, or they'll purchase debentures, etc. And we have hybrid mutual funds also, wherein some much money will be put in debt, some money will be put in government bonds, and some money will be put in equity, etc. But here we are talking about what type of mutual fund? Equity oriented mutual fund. For that, we will see 12 months period of holding. Then we have units of Unit Trust of India. Unit Trust of India. See, now we have so many mutual fund companies. Correct? Before 1992, SEBI came into existence, there was only one person which had that authority to give these units. That authority was called as Business Trust of India. Now it is called as Unit Trust of India. So if you purchase shares of the units of that Unit Trust of India, for that period of holding is 1 year. If it is holded for more than 1 year, then it is long. Less than equal to 1 year, it is short. Then 2 years period of holding. 2 years period of holding is for whom, sir? For immovable property. What will I see, sir? 2 years. For land and building, I see a period of holding of what, sir? 2 years. For immovable property, the period of holding which I am going to see is 2 years. If I hold it for more than 2 years, less than 2 years, it is. Or any securities not covered above. Any securities not covered above means not listed securities, not equity oriented mutual funds. So it can be unlisted securities. Or I have purchased shares of a private limited company. If I have purchased shares of private limited company, unlisted. I have purchased shares of Tesla Inc. listed in New York Stock Exchange. What will I see? 1 year or 2 years? 1 year or 2 years?
2 years.
2 years. Why, sir?
It's not
Because not listed in recognized stock exchange of India. So if it is a Tesla, then I will see 2 years time limit, which is any securities not covered above. Above means in point number 1. And 3 years time limit is for all other types of capital asset. And the period of holding will be 3 years. For whom, sir? For all the types of capital asset. For all the types of capital asset, the period of holding is 3 years. So 1 year, 2 year, 3 year. If you hold it for more than 1 year, 2 year, 3 year, long term. Less than 1 year, 2 year, 3 year, short term. 1 year is for securities listed in recognized stock exchange of India, units of unit trust of India, units of equity oriented mutual fund, and zero coupon bonds. And 2 years is for immovable property or any securities which are not covered above, and 3 years is for all other types of capital asset. See, last year was a year of election. Last year was which year, sir? Last year was an year of election. Last year we had an election in India. Because we had an election in India, last year we had an election in India. Because we had an election, we had 2 budgets, before election and after election. Okay. So now, after the election, there was some changes made in this chapter called as capital A. As per the changes, now the 3 year holding period is gone. The 3 year holding period is gone. Now we don't have the 3 year holding period. So write a note. If the transfer of capital asset is on or after 23rd of July 2024. If the transfer is on or after 23rd July 2024, then period of holding of 2 years or 24 months should be considered. 2 years or 24 months should be considered. Period of holding of 2 years or 24 months should be. 3 years condition is gone. But please note, if the transfer is before this date,
3 years.
okay, please note that. By the way, all other type of capital asset, what will be included? Give me example. Jewelry is there. Debt oriented mutual plant and machinery is not a capital asset. Debt oriented mutual fund, car is not a capital asset. Jewelry is there, 3 years. Debt oriented mutual fund,
Other work of arts.
any other work of art is there, bullion is there.
Bullion is there. Virtual.
Period of holding of 2 years should be considered if the transfer is on or after 23rd July 2020. If the transfer is on or after that date, we should see the period of holding of 2 years for all type of capital asset. And of course, 1 year term is same. So these assets period of holding will always be 1 year only. Okay. Yeah? So capital gain can be of two types. One is short term or long term. How will I get short term capital gain? By transferring short term capital asset. How will I get long term capital gain? By transferring long term capital asset. How should I see whether it is long term or short term capital gain? I should see period of holding. Period of holding is more than 1 to 3 years. Long. Period of holding is less than 1 to 3 years. Short. Write down next one. Yes, sir. Immobile. Yeah. Immobile property means land and building only. घर कोई भी टाइप का बिल्डिंग प्रॉपर्टी एक्सेप्ट रूरल एग्रीकल्चर लैंड. Computation of section 48. Computation of capital gain. Computation of capital gain. Now capital gain can be of two types. One is long term capital gain and short term capital gain. So how should I compute capital gain in case of short term capital asset and in case of how should I compute the capital gain in case of short term capital asset and in case of long term capital asset? Particulars rupees. Full value of consideration. Take full value of consideration. From that subtract expenses incidental to Full value of consideration, subtract expenses incidental to transfer. You will get your net sale consideration. Full value of consideration, subtract expenses incidental to transfer, you will get your net sale consideration. From that, subtract cost of acquisition, subtract cost of acquisition, subtract your cost of improvement, subtract cost of acquisition and cost of improvement, you will get your gross short term capital gain. You will get your gross short term capital gain, subtract exemptions, under section 54 series, 54, 54F, A, B, C, D, etc. is there. Exemption under section 54 series, subtract those exemption. Now what you get is called as your taxable short term capital gain. Taxable short term capital gain. Taxable short term capital gain.
You have to look at the A, B, before exception A, B, C, we have to look at
Where is that?
Series.
But have I thought about that?
no, sir.
Yeah, so I don't know become how they teach.
This one.
Then this only, whatever you do, same thing.
Was in this formula is what?
Same format will be there. The subject is same. Huh?
Didn't it? What it is.
Yeah, that's what subject, because income tax law is same. Computation will also be same only. No. Tim. None. There, NIH. Write the format for long-term capital gain. Write the format for long-term capital gain. Now there is one change over here. You should take what, sir? Index cost of acquisition and index cost of. You should take what, sir? Index cost of acquisition and index cost of. Index cost of acquisition and index cost of improvement. Index cost of acquisition, index cost of improvement. Full value of consideration less expenses incidental to the transfer, net sale consideration. Exam. Done.
Yes.
Right, fast, go back. Talk less, write more.
Sir, cross long-term gap.
Necessary should not copy paste.
Yes, much of. No. Next.
Check.
Prove me wrong. Not check.
Now, in your past students, before we learn about this, how to compute capital gain, we'll learn. Okay, for short-term capital gain, what should I do? I should take full value of consideration, less expenses incidental to transfer. You will get your net sale consideration. Then from that subtract cost of acquisition, cost of improvement. You will get your capital gain. Now please see. Example number 1. I purchased a jewelry. I purchased a jewelry. Okay. I purchased a jewelry on 26th of May 2022. On 26th of May 2022, I purchased this jewelry. For how much did you purchase, sir? For 5 lakh rupees. I purchased a jewelry on 26th of May 2022 for rupees 5 lakhs. Then what happened, sir? Then what happened, sir? I added some diamonds in the jewelry. Okay, I added some diamonds in the jewelry on 28th July 2023. On 28th July 2023, I added some diamonds worth 12 lakh rupees. I purchased the jewelry for 5 lakhs. I added some diamonds. Diamonds were added on 28th July 23. How much, sir? 12 lakh rupees worth diamonds were added. Okay, then later I sold this property. I sold this jewelry. I sold this jewelry for 25 lakhs. On what date, sir? On 10th of May 2024. I sold this jewelry for 25 lakhs on 10th of May, and I incurred an expenses of 50,000 rupees for selling this. How much expenses did I incur for selling this? 50,000 rupees. Now, let us see how to compute the capital gain. Have you understood the question? There was a jewelry which is purchased by me. I made some improvement in the jewelry. Then I sold the jewelry. Now, first I should see what, sir? Whenever the question is there, first I should see period of holding. Date of acquisition is what? 26/5/22. And date of transfer is what, sir? 10 May 24. Can I say period of holding is less than 2 years? I mean, it is not even 2 years, so less than 2 years. So can I say it is a short-term capital asset? So now the gain which I am going to get is a short-term capital gain. You know how to compute short-term capital gain? Now what is the provision telling? Tell me the format. What is the format says? I should take my full value of consideration. How much?
25.
25 lakh rupees is the price at which I have sold the jewelry. Correct? No. From this I should subtract
Expenses to transfer.
expenses incidental to transfer. Did I incur any expenses for making this transfer? Did I incur some expenses? Yes, sir. How much, sir? 50,000 rupees. Now what I get is called as net sale.
24 lakhs 50,000.
Net sale consideration is 24 lakh 50,000 rupees. From this I'll subtract cost of acquisition. I acquired this asset for 5 lakh rupees. So I'll subtract 5 lakh rupees.
Cost.
Less cost of
12
improvement. How much, sir? 12 lakh rupees is my improvement. Therefore, my short-term capital gain is how much? Hey, okay, not okay? Hey, have you understood? Have you understood this?
Yes, sir.
Capital gain computation you have understood? Very simple, no? Is there anything involved? Sale value, subtract expenses. You will get some net amount. Net amount, subtract your cost and improvement if you have any. You subtract that, you will get your capital gain. Is it okay? Capital gain is easy. Now, this is for computation of capital gain for short-term capital asset. In long-term capital asset also format is same, but what is the extra point they are telling? I should not take cost of acquisition, I should take index cost of acquisition. I should not take cost of improvement, I should take index cost of improvement. Now, before solving a question on that, let me explain you the concept of indexation. Concept of indexation. Now, what do you mean by indexation, sir? Okay, now please see. You don't have to write this. I came for the first time in my life. I came to Chennai in the year 2013. So I was doing my articleship. So the firm where I was doing articleship, they had some stores audit to be conducted. So like we have DMart, etc. Before we had something called as Foodward. There was some company like this. It was there. Okay, Reliance Fresh is there now. So now in 2013, I came to Chennai for the first time. When I came to Chennai for the first time, I stayed in T Nagar. So some hotel they had given over there in T Nagar. And there is a restaurant over there called as Hotel Anand. In the main signal only, there is one hotel, Hotel Anand. Anand. Okay, Hotel Anand, very nice restaurant this. Now, at that time when I came for the first time in my life, when I came to Chennai, when I went for breakfast, I had pongal over there. because before coming to Chennai, it was told that in Chennai, Pongal is very famous. Pongal is Chennai's food, so Pongal is very famous, etc. So I had Pongal over there. So I liked the Pongal. Pongal was very nice. So they took around 20 rupees for that Pongal. And I also had idli. I had 2 idlis. For 2 idlis, they took 15 rupees at that time. So they took how much, sir? 20 rupees for Pongal, and 2 idlis, they took how much? 15 rupees. No, now that was the only time I came to Chennai. So I was in Chennai for almost 7-8 days. And after completion of audit, we went back, and then I never came back to Chennai. It was in the year 2024. I came back to Chennai again. In the year 2024, in January 2024, I came back to Chennai. In January 2024, I came back to Chennai to take classes. Okay. I came back to Chennai in the year 2024. Amish, you enjoy, Amish, no problem. He's taking feelings, you enjoy. You are not taking. Now, please see. So I came back to Chennai in which year, sir? 2024. I came back to Chennai. In the year 2024, I came back to Chennai. When I came back to Chennai, I thought, let me go to the same place where I went. Meaning, we were staying over here, but one memory will be there. No? Always, whenever you go after 10 years, if you are going somewhere, you will feel, we should go to the same place. We'll see how it is, whether it is changed. Now, why I wanted to go over there? Because right opposite to that road, no, wherever we were staying, that Ponti Bazaar was there. So every evening I used to go to that Ponti Bazaar because a lot of people were there. I used to like that. So what happened, sir? I went to Hotel Anand. Okay, from here I was having class, and after 12 o'clock I went over there. And again, because I went after so many years, I had the same food. I had the same food over there. I had what, sir? That same Pongal I had. Now this time when I had the Pongal, the same Pongal, they charged me 75 rupees. Same Pongal, nothing changed. Quantity also same, nothing changed. And idli which they gave me, idli they charged 50 rupees. They gave idli, 2 idlis, and Pongal, how much they were charging, sir? 75 rupees and 50 rupees. Now, a Pongal which I had 10 years back was costing me only 20 rupees. Now the same Pongal is costing me how much, sir? 75 rupees. Same Pongal is now costing me 75 rupees. Why do you think this is happening?
Inflation.
Some inflation concept is there, meaning the product which is available, which I had 10 years back, now the value of the product will not be same today. Correct? No? The value of the product today, will it be same, sir? No. So what lawmaker says, if you have a property, let us say I purchased this property in the previous year 2001 for rupees 10 lakhs. I am selling this property today. I am selling this property in which year, sir? 24-25 for rupees 75 lakhs. I am selling this property for how much? 75 lakhs. Today I am selling it for 75 lakhs. If I subtract 75 lakhs minus 10 lakhs, don't you think it will be very unfair? I'll have to pay tax on 65 lakh rupees. Why, sir? Your purchase price was 10 lakh rupees, so you should subtract 10 lakhs. Yeah, but today will I get the same property for 10 lakhs? Meaning there is some inflation. At that time, 10 lakhs was huge amount. But compared to today, 10 lakhs will be lesser amount only. Correct? When compared to that year, when almost 24 years ago. Correct? No? Almost 24 years ago when I purchased the property, for me 10 lakh was huge amount. But now the property cost is only, now if I take the same 10 lakh rupees as my cost of acquisition, don't you think my capital gain will be huge? I'll have to pay a lot of taxes. So lawmaker says, don't worry, Dilip. Because you have holded the asset for a longer period of time, I will give the benefit of inflation to you. Because you have holded the property for a longer period of time, I will give the benefit of inflation to you. This benefit of inflation is indexation. You don't subtract your cost of acquisition. Normally what I subtract? Cost of acquisition. You please don't subtract cost of acquisition. Instead of cost of acquisition, you take index cost of acquisition. Instead of subtracting cost of acquisition, you should take index cost of acquisition. So how will I come to know what is the index cost of acquisition? Lawmaker says, I'll tell you. See, what lawmakers have done is, they have told that Year 2001-2 is the base year. That is the base year. Okay, from there I will check what is the increase. Meaning, when I'm checking the increase of the price of Pongal, I'm comparing with which year's price, sir? 2013 price I am comparing. Correct? No. So today, whatever I paid, I am comparing that with 2013's price. Yeah, am I comparing what was the price of Pongal in the year 2000? Am I comparing what was the price of Pongal in the year 2005? It would have been even less. Am I comparing it with 1990? No. So for me, what is the base year for comparison? 2013. Correct? Hey, does that mean that before that Pongal was not there at all? Pongal was there, but I don't have that information with me. Similarly, under income tax law, for computation of capital gain, if it is a long-term capital asset, you should not take cost of acquisition, you should take index cost of, meaning you should take increased cost of acquisition in other language. Now for increasing the cost, I will take a base year. What is my base year? 2001. Which is my base year, sir? 2001-2 is taken as your base year. Meaning, what government has done? Government has told, if you had 100 rupees at that time, what is the value of that 100 rupees in 24-25? Government, the lawmakers have told the value of 100 rupees will be 363 rupees. No, sir, repeat. If I had 100 rupees in the year 2001-2, what is the value of this 100 rupees today? 363. Okay. So now tell me, if I have purchased the property for 10 lakh rupees at that time, what will be the value of that 10 lakh rupees today? Calculator you should use. You know, I know you are smart, but use calculator. Basic 2 plus 2, you don't know, you are telling this this amount you are telling by yourself.
336.
What is the amount? How to do you know? Cross multiplication. See, if 100 rupees was became 363, 10 lakh will become how much? Correct? No? Cross multiplication. X is equal to 363 into 10 lakhs divided by 100. 0 cancel. 1 also shall I cancel? 1 also shall I cancel? Base. Some Tarpuris will be there, they'll cancel 1 also. Sir, 363 into 0 is 0. How much, sir? Okay, not okay. So now what lawmakers are telling, Dilip, you sold the property. Now I'll take the same example. Okay, you have understood? Now instead of subtracting from 75 lakhs, instead of subtracting 10 lakhs, how much will I subtract? 36.3 lakhs. So what is my capital gain? Faster.
38.7.
38 lakh 70,000 rupees. Now this, sir, index value, where will I find that index value? You don't have to worry. In the examination, they'll give you cost of inflation index. So in the examination, they'll give you in the question itself. See, this is inflation index cost. So in the year 2001 to 100 rupees. In the year 2009-10, that 100 rupees became how much? 148. Correct? In the year, that same 100 rupees became, in the year 1920, it became how much? 289. In the year 2015-16, it became
254.
in the year 2025-26, it is. Are you understanding? So that year they have taken the base and they have compared the increased cost of that amount. Okay, have you understood this concept of indexation? Now shall we do a question on long-term capital asset also? Hello.
So we have to multiply this index amount with the cost of acquisition.
Yes.
From that we will
Divided by base, divided by the year of acquisition. Yeah. Drawing the questions. Now let us say I purchased a house. I purchased a house in the previous year 2000. 2012 for rupees 10 lakhs. I purchased a house. When did I purchase the house, sir? In the year 2012 for how much? 10 lakh rupees. On this house, I added an additional floor.
Improvement.
I added an additional floor on this house. I added an additional floor on this house. Sir, when did you add this additional floor? In the year 2015-16, and I incurred 15 lakh rupees for adding this additional floor. I purchased the house for 10 lakh. I added an additional floor. How much, sir? 15 lakhs. Now this entire house was sold by me. I sold this entire house for, in the previous year, 24-25, on which date, sir? 26th of May 2024, I sold this house. And I sold it for rupees 80 lakhs. For how much did I sell, sir? 80 lakh rupees. Now, for selling this house, I incurred some expenses of 2 lakh rupees. I incurred an expenses for selling this house. How much did I incur, sir? 2 lakh rupees. Now, I should compute my capital gain. Now, can I say, first of all, I purchased in the year 2001-2 and sold in the year 2024-25, holded it almost for 24 years. So, can I say the capital asset is a long-term capital asset? Therefore, I will get long-term capital gain. Hello. I should take what, sir? Full value of consideration. How much? I sold it for less expenses incidental to transfer. I incurred an expenses of 2 lakh rupees. Therefore, my net sale consideration is correct, not correct. Net sale consideration 78 lakhs less.
Cost of
I will subtract index cost of acquisition. Problem is there in life. I should not take cost of acquisition. I should take index cost of acquisition. My index cost of acquisition will be 10 lakhs multiplied by index for the year of. I should see what is the index for 24-25. What is it, sir? 363. Index for base year is 100. Sir, how do you know? Sir, it is given over here. Base year index is 100. Index for 24-25 is 363. So what will I do? 10 lakhs into 363 divided by how much will I subtract? 36 lakhs 30,000.
30,000.
Okay, less. Can I say there is improvement also? No, because it is a long-term capital asset. Can I say the improvement also will be indexed?
Yes.
Index cost of improvement. Now my question is, I'll tell you the index value. My question is, when I'm going to take index cost of improvement, I'll take my cost of improvement of 15 lakh rupees, index it to current date, correct? So I'll divide it by what? I'll divide it by index of which year, sir? 15, 16 or 1, 2?
15, 16.
Why not 1, 2?
That is the date of.
That is the date of his
Sir, improvement, when you are indexing, you should see from the date when you made the improvement. Correct, no? So I'll take index for the year of 24-25 divided by index for 15-16. How much is it? 254 rupees. So what is my index cost of improvement? 28 lakhs. Sir. 700. So my long-term capital gain is
20 lakh 26 30,000.
20 lakhs 26,000
300.
300. Yeah, understood, not understood. Yeah, have you all understood this? How to compute capital gain? Long-term capital gain, short-term capital gain. The long-term capital gain, why are we taking?
Cost of occupation. 360 cost of occupation. The definition index. They will not.
They'll give. Okay, yeah.
360.
They'll give. Everyone understood this? Write down note number 1. Sir, what do you mean by index cost of acquisition? Index cost of acquisition is equal to cost of acquisition into index cost of acquisition is equal to what, sir? Cost of acquisition into index for the year of transfer divided by index for the year of acquisition. Cost of acquisition is equal to index for the year of transfer divided by index for the year of acquisition. And by the way, what if the acquisition is before 1/4/2001? You will take which year's index? 100 only you will take. Base. Because they have given base years. So if I purchase the property in 92-93, I will take index value for 100 only. Note number 2. Index cost of improvement. Index cost of improvement is what, sir? Cost of improvement into
Index for the year of transfer by year of
index for the year of transfer divided by index for the year of improvement divided by index for the year of improvement. Okay, yeah. Note number 3. Now please note. If I purchase any property, in past students, I purchased a house in the year 92-93. Okay. Now you are telling, when you have purchased for, let us say, 5 lakh rupees, you are telling I should take index from the year 2001 from base year. What about the inflation during this period? From 92-93 till 2001 also inflation would have happened, no? What about that inflation, sir?
take the base.
Are you understanding what I am asking here? Normally you are telling me, sir, if the property is acquired before this date also, you should take index for base year only. What if property is acquired before that date, but index, I mean the inflation would have been there before that also, no? So for that 8 years,
92-93
for that 8 years, don't you think that value would have increased?
Yes.
The value would have increased. So what lawmaker says? What lawmaker says? Point number 3. If the capital asset is acquired, if the capital asset is acquired before 1/4/2001, if the capital asset is acquired before 1/4/2001, meaning if you have purchased the asset before 1/4/2001, then the cost of acquisition will be what, sir? If I have purchased the asset before 1/4/2001, then my cost of acquisition will be equal to actual cost of that asset my cost of acquisition will be actual cost of that asset, capital asset, or fair market value of such capital asset as on 1/4/2001, whichever is higher. Actual cost or fair market value, whichever is higher. Meaning lawmaker says, yeah, I understand there will be increase in value. So you do one thing. I don't have index value available before that date. I can give indexation only from that date. So when you're taking the cost of acquisition only, you take the actual cost of that asset or the market value as on 1/4/2001, whichever is higher. If there was an inflation, the market value will be higher. Take that market value as your cost of acquisition, and then on that amount give the index value. Everything is available. For what do you want the market value? For what? I mean, for which asset you want? Yeah, which asset? Capital asset means land or jewelry or etc. Building. Go to any government department. That time, don't you think registration of building would have happened? So if a capital asset is acquired before 1/4/2001, actual cost will be cost of acquisition or fair market value as on 1/4/2001, whichever is higher. Sir, what if there was an improvement done before 1/4/2001? What if there was an improvement done? Next point. Note number 4. If any improvement is done before 1/4/2001, Majapan. If any improvement is done before 1/4/2001, lawmaker says Majapanno. Majapanno means what, sir? Ignore. Why, sir? Why I should ignore that, sir? Because when I am taking market value of your property, when I take cost of acquisition as market value, I will consider that improvement also. No? I'll take the market value of the entire property. No? So lawmaker says ignore the improvement done before 1/4/2001. Okay, not okay? Nil. If it is before. Now, please note, very important thing. Whatever you have studied is not applicable. Next note says, Maja is there. Note, or you write amendment applicable with effect from applicable for transfer of capital asset. Amendment applicable for transfer of capital asset on or after 23rd July. Amendments applicable on or after 23rd July. For transfer made on or after 23rd July 2024. Amendment applicable for transfer made on or after 2024. Now, what is the amendment telling, sir? What is the amendment telling? No indexation. No indexation. Benefit will be given if the transfer is before 23rd July. No indexation benefit will be given for transfer of capital asset on or after 23rd July 2024. No indexation benefit will be given for transfer of capital asset on or after 23rd July 2024. Now please note, if you don't clear your examination in December, next year this entire chapter is changed. Why? For you, the previous year will be no, that is for this year, for your exam. But if you are writing in next June, for you previous year will be 25-26. So 25-26 indexation will not be available at all. Correct? No, because the transfer is after this date. Hello, 25-26 will start from 1st of April. See, normally income tax law, 40 to 50% of the syllabus anyways get changed every year. 40-50% of syllabus will be changed. On that also, this the entire chapter is changed. Yeah, you understand? This chapter, computation part will completely change. No indexation will be given if you are making a transfer on or after. You are writing one group only, no? That means you will clear, no? Why you are worried? You are trying. No problem. What is the problem? Only one chapter. Sir, next year also you go live, sir. No. Okay. No indexation will be available. No indexation benefit will be given if the transfer is on or after 23rd July 2020.
Given because it is unfair that the inflation rate is not.
Because before the tax rate for capital gain, long-term capital gain was 20%. Now they have reduced to 12.5%.
12.5%.
But still, this is more beneficial. Because your cost is increased, gain is reduced. Now your cost is not increased, gain is more. On that more gain, you are just giving me benefit of 7.5%. Very bad. La.
This is short term.
No, long.
Long term index or after 23, 7, 24, 12.2. Short term 20%. So the 20% of the short term 111 is from the short
No. I will discuss that. Don't worry. Tomorrow we'll discuss. But anyone has any question on whatever we have discussed till now? Hey Raj, what did we discuss today?
Wait.
Hey, is it clear? Have you written that point? Tell me the answer for question number 1, 2, 3. 1, 2, 3. Ding, 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 ding. Question number 1, 2, 3. Ladies perfect. Ramesh, Maja is there.
Sir, 30,000.
La 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 la. Tell me the answer for all the three questions. I have received answer for first question. Na 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 na. No 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 no.
Acquisition cost. Round up.
And total income, not the individual income. Hello. Na 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 na. Second answer is 8 lakh something. I don't know. 8,47,000 something. La 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 la. Bye, Sudri. Two 2001 two. Shall I do it now?
For sale of 27 lakhs. 163 divided by 130. Cost of acquisition 35 lakhs.
Okay, students, I'll do.
Cost of acquisition in the amount of use purchase value.
Now, first question says, Mr.
Purchase value.
Devesh, Mr. Devesh had purchased a golden ring on 17th of August 23 for 20,000. On 1/5/24, he has won a diamond costing 25,000 rupees. So there is a purchase price of 20,000. Cost of improvement is 25,000. And he sold such ring for 80,000 rupees, incurring a brokerage of 5,000 rupees. Capital gain is how much? They have given index value. So date of acquisition is 17/8/23. Sale date is 1/8/24. Period is less than 2 years. Therefore, it is short-term capital asset. So how will I answer, sir? Mr. Devesh 24-25 assessment year 25-26 computation of income from capital gain. Particulars rupees. Full value of consideration is how much? 8,000. Is there any expenses incidental to transfer? $75,000 less cost of acquisition. Why, sir? Short-term capital asset. How much is my cost of acquisition? Cost of improvement is मजा you're taking, huh? Short-term capital gain. How much? Hey, how many of you got this answer? Archana, you got this answer? Example much. Gopi purchased a property during previous year 2001-2 for 5 lakh rupees. He spent 3 lakh rupees on improvement in the year 2004-5. The property was sold for 37 lakh rupees and paid a brokerage of 2%. Can I say this is a long-term capital asset because it was purchased in the year 2001-2? Now please say. Sir, they have not told the date of sale, no sir. Take it as 10th of July 24. Date of sale is 10th of July. So what is the name? Mr. Gopi. Previous year 24-25 assessment year. Computation of income from capital gain. Particulars rupees. What is my full value of consideration? 37 lakh rupees less
Expenses.
expenses incidental to transfer is 74,000 rupees. So what is my net sale consideration? 36 lakh, 26,000 less index cost of acquisition. 5 lakhs is my cost of acquisition into index for the year of transfer divided by index for the year of acquisition. How much? How much? 18 lakh, 15,000. Index cost of improvement is 3 lakhs into 363 divided by improvement. Which year improvement was made? In the year 2004-5. Therefore 113. 9 lakh 63,000 117. Therefore my capital gain will be how much, sir? 8 lakh 47,230. 847 230. 847 230. 847 230. Okay. Yeah, how many of you got this answer? The answer is right. A easy chapter. Only 2-step chapter this is. Very important chapter. Exam 100% question will come. 5 marks for sure you will get. Easy chapter. We'll see.
717.
963.
3716.
That only I will tell.
The answer is 847.
83, sir. For us, 84.
Correct only I will. Question number
3, sir.
on December 23rd or December 23rd, 2024, Rajat sold 500 grams of gold for a consideration of 13 lakh 50,000, which was acquired in the year 2000, 20th August 2000 for 40,000, for 4 lakh, sorry. Fair market value is 3 lakh 60,000. Find out the amount of capital gain. Can I say it is a long-term capital asset?
Yes, sir.
And can I say the period of holding is long? Therefore, my cost of acquisition will be actual cost of fair market value, whichever is higher, because it was acquired before. Mr. Rajat, previous year 24-25, assessment year 25-26, computation of income from capital gain. Particular to this. Full value of consideration is how much? Less. Expenses incidental to transfer is net sale consideration is less. Now please note, in this question the transfer was made after 23rd July, so I will not take indexation. How much will I take directly?
4 lakhs.
Cost of acquisition as 4 lakhs. There is no improvement. Is there any improvement? No improvement is there. Therefore, my
It's,
income from capital gain is
9,50,000.
9,50,000. Sir, why have you not taken indexation? Because the transfer was made after 23rd July.
Whatever the property or purchased before 1/4/2001, correct. Either they have to take the actual cost of acquisition
Or market value.
market, whichever is higher.
Higher.
For the normal indexation, that is that to 2001. Taxation to compensate the inflation that is from 2001 until the year.
Yeah.
Here we are taking, for example, it is 2024, so for the 24 years of inflation, we are considering it. When it comes to the indexation, before 2001, we are not taking an index value, rather we are considering a farm market value. But in this case, the farm market value is for 2001. Okay, so the inflation is concerned only till 2001. So from 2001 to 2024, I'm still not compensating the inflation value.
In this case, because the transfer is after 23rd July. So new law says you cannot take indexation. Rate of tax is changed. You asked me this question. Google asked me question here. Hey, okay, that is all for the day. Let us meet tomorrow. Let us meet tomorrow same time. Tata, bye bye. Take care. Enjoy.
Write the Mr. Ranjit.
Huh?
Mr. Ranjit. Write the yeah, in exam in Mr. Ranjit.
Hey, bye. Wait. Now please. I am not teaching accounts. The format which I am telling is this format. Mr. Rajat, previous year, assessmental completion. This is not it. In the books of Mr. Rajat Illa. That is accounts. College is Google Picture. Hey, okay, let us meet tomorrow same time. Till then, tada, bye bye. Take care. Enjoy, students. Bye.